clerk will now proceed to read the orders of the day.
Finance number 2 Bill Committee.
Now.
Order. Under the order of the House of the 16th of December, we shall now move to Committee of the Whole House. Order.
Finance number 2 Bill, clauses 63 to 68, clauses 83 to 85 and Schedule 13, clause 86, and any new clauses or new schedules relating to the subject matter of those clauses and that schedule.
I remind members that in committee, members should not address the Chair as Deputy Speaker, but please use our names when addressing the Chair. Madam Chair, Chair and Madam Chairman are also acceptable. We will start with the group on inheritance tax on pension interests, and we begin with Clause 63, Stand Part, with which it will be convenient to consider the clauses Stand Part and new clauses on the selection paper. The question is that Clause 63 stand part of the bill. I call the Minister, Lucy Rigby.
Thank you very much, Madam Chair, and it's a pleasure to open this second day of Finance Bill Committee stage debates. Yesterday, my honourable friend, the Exchequer Secretary, set out how this bill gives effect to a budget that took fair and responsible decisions to stabilise and strengthen the public finances, address the cost of living and renew our public services. We're clear, Madam Chair, that we will not repeat mistakes of the last government. That means no return to austerity and no completely irresponsible, unfunded spending commitments either, each of which, unfortunately, were features of the party opposite's time in power. This government wholeheartedly rejects those failed approaches, and we instead choose a different path, one of fiscal responsibility and one which will strengthen our economy so that it delivers for people right across this country. Today, the House will consider a further set of important and targeted measures relating to pensions, gambling duties and alcohol duty, which reflect this government's commitment to a tax system that's fair, modern and aligned with the realities of today's economy. Our approach to changes to gambling taxation are, as we'll come to later on this afternoon, fair and proportionate, and as my right honourable friend the Chancellor set out in her budget, our reforms to gambling taxation will significantly contribute to this government's efforts to lift an additional 450,000 children out of poverty. On pensions, the clauses before the House ensure that generous tax reliefs continue to support pensions' core purpose, that is, helping people save for retirement. They address long-standing inconsistencies and ensure that pensions are not used primarily as a vehicle for passing on wealth free of inheritance tax, but instead continue to protect the vast majority of estates and maintain strong incentives to save. Madam Chair, I'll turn now to clauses 63 to 68. Pensions enjoy significant tax benefits, with gross income tax and national insurance contributions relief costing £78.2 billion in 2023-24. It's therefore crucial to ensure that these reliefs are being used for their intended purpose, which is to encourage saving for retirement and later life. Changes to pensions tax policy over the last decade by the previous government led to pensions being used and increasingly marketed as tax planning vehicles to transfer wealth rather than holding true to pensions' primary purpose, which is, of course, providing a way to fund retirement. As honourable members will know, there are also long-standing inconsistencies in the inheritance tax treatment of different types of pensions. Most UK-registered pension schemes are discretionary, meaning members are able to nominate who they would like to receive any death benefits, but the scheme trustees are not obliged to follow members' wishes. Under existing rules, any unused pension funds and death benefits from discretionary schemes are not subject to inheritance tax. By contrast, there are some pension schemes that are non-discretionary, and these are subject to inheritance tax under existing rules. Madam Chair, the changes made by Clause 63 mean that most unused pension funds and death benefits payable from a pension will form part of a person's estate for inheritance tax purposes from the 6th of April 2027. Clause 64 ensures that personal representatives are responsible for paying any inheritance tax due. Clause 65 means personal representatives will be able to request that the pension scheme administrator withholds paying a proportion of benefits where certain conditions are met. It also allows both personal representatives and pension beneficiaries to make pension scheme administrators pay inheritance tax due on pensions directly to HMRC, again provided certain conditions are met. Clause 64 makes some consequential amendments to the Inheritance Tax Act 1984 to ensure that the existing exemption for spouses and civil partners and the treatment of payments to charities continue to apply. Clause 67 changes the income tax rules for pensions to provide for the payment of inheritance tax, including in respect of direct payment by pension schemes. And Clause 68 ensures that the changes take effect from the 6th of April 2027. Madam Chair, these clauses ensure that pensions are used, as I said, for their core intended purpose rather than as a vehicle for passing on wealth free of inheritance tax. These clauses also remove long-standing inconsistencies and deliver on the government's promise to this country to build a stronger and a fairer economy.
Shadow Minister James Wilde.
Thank you very much, Madam Chair. And I wish to speak on behalf of His Majesty's opposition to new clauses 22, 23 and 24, tabled in my name and those of my honourable friends. And as the Minister set out, clause 63 to 68 introduced measures to apply inheritance tax to unspent pension assets and other death benefits for deaths occurring after the 6th of April 2027. Madam Chair, this Labour government has taken taxes to record levels, £26 billion in additional taxes in this budget, £66 billion since the election, tax increases that were not mentioned in their manifesto. And Labour is increasing taxes on family businesses, on farms, on jobs, on dividends, on savings, on motorists, and now death. Removing the inheritance tax exemption for pensions could undermine efforts to encourage people to save at a time when people aren't saving enough. And what does the government do? They limit the salary sacrifice pensions contribution scheme and introduce a new raid on people's pensions pots. The Minister didn't refer to the impact assessment, but it is worth pointing out that it estimates that 10,500 estates will now become liable for inheritance tax, raising £1.5 billion by 2029, and 38,500 estates will pay more inheritance tax than previously was the case. And that's why we oppose this extension of inheritance tax. And the underlying principle, which the Minister seemed to allude to, that people's money doesn't belong to them, it belongs to the state. New Clause 22 is straightforward. It requires the Chancellor to set out the impact of these measures on pension saving, household saving decisions and on personal representatives. There is real concern, I'm surprised the Minister didn't address this, about the administrative burden that is being placed on personal representatives and the effect on the industry. Personal representatives will be required to identify every pension asset, to calculate the inheritance tax due and ensure payment within 6 months. And they will be personally liable if they fail to settle all the liabilities that are due. In many cases, that deadline will be impossible to meet and it must be extended. Furthermore, if a pension fund has to sell illiquid assets, such as commercial property, quickly, it may well not get the full market value. But the bill does not introduce a relief where the underlying assets must be sold and the proceeds were less than the value of the assets at the time of death. Late payments will attract interest at 8%. By contrast, someone in self-assessment has 10 months to pay tax on the income they already understand. Both the Association of Taxation Technicians and the Chartered Institute have offered some practical solutions. Firstly, to extend the withholding periods, personal representatives can ask pension administrators to withhold 50% of funds for up to 15 months. But that's simply not long enough for the complex cases I've referred to, particularly where business property valuations have to be agreed with the HMRC. Will the Minister consider allowing HMRC to extend withholding in such complex cases? Second, they should allow instalment payments for illiquid pension assets. Billions of pounds of pension wealth are in these illiquid assets. The government allows inheritance tax to be paid over 10 years for illiquid estate assets. Why deny the same practical relief for pensions? When this policy was announced, the OBR gave it a very high uncertainty rating. and estimated behavioural effects will cut the static yield by around 43%. So the government's own forecasters accept these changes may well significantly alter saving behaviour, and the new clause simply requires the Chancellor to assess that impact and come to the House to make it clear. New clause 23 requires the Chancellor to consult on the impact of sections 63 to 67 and whether they deliver better outcomes for savers and pensioners. The truth is the government rushed this consultation out after the 2024 budget and followed it with a very narrow technical consultation which did not consider the principled question of whether this approach to pensions being brought with inheritance tax framework at all was appropriate. As the Investing and Savings Alliance told the House of Lords Economic Affairs Committee in their inquiry, which the Exchequer Secretary gave evidence to, they said if we were consulted and listened to, we'd probably not be having this discussion today because I do not think pensions will be going into IHT. And both the Chartered Institute and ATT have criticised the government for consulting on pensions in isolation rather in the context of individuals' wider inheritance tax position. So our clause is explicit. Consultation must take place to assess whether these changes deliver better outcomes for savers and pensions, wording which reflects the commitment the Labour Party made in their manifesto. Our third new clause 24, is essential. It would require the HMRC to publish comprehensive guidance on the new rules for pensions and to set up a dedicated helpline. And why does this matter? Because this measure will be incredibly complex in practice. The Chartered Institute has said that professional executors are already questioning whether they can continue to operate in the market at all. Some firms, we're told, are already leaving the market. And if professionals step back, the burden falls on lay personal representatives, often grieving family members or friends, with more errors, delay and potentially a wider tax gate ensuing. Professional indemnity insurers also need clarity. Yet when is the HMRC due to deliver detailed guidance? Not until spring 2027, just weeks before these changes take effect. That is completely outrageous and far too late, and that's why this clause would require guidance to be published within 6 months of this Act being passed. I want to touch on a broader concern which has been raised with me around the serious unintended consequences potentially for unmarried couples. While today couples can anticipate making financial provision for each other via pensions, if this measure comes into force, they will have to look at other options. If one member of an unmarried couple in their 50s or 60s dies with a pension at peak value, the survivor could lose up to 40% of that fund. Are ministers talking to pension scheme administrators to mitigate the risks for such couples and to provide clear guidance? Madam Chair, these clauses increase taxes, they add complexity, they penalise saving and they add stress for grieving families. Despite clause 67, we're also advised there's still a risk of double taxation of inheritance tax and income tax, which could see beneficiaries paying an effective rate of 67%. So our amendments seek to mitigate its worst impacts, and the Chancellor should assess the real impact on saving behaviour and personal representatives. She should consult properly on these provisions, and she must provide clear guidance backed by dedicated support. We should be incentivising saving, encouraging people to do the right thing. Extending inheritance tax does the opposite, and we will oppose these measures tonight.
Liberal Democrat spokesperson Daisy Cooper.
Thank you, Madam Chair. This is a retrospective tax without transitional protection. It upends plans for those who have already made sacrifices to build up their pensions, undermines confidence in pensions planning, reduces long-term investment and causes people to rush to withdraw money from their pensions too. As has been mentioned already, the Chartered Institute and ATT have raised concerns about these clauses which are shoehorning pensions legislation into tax legislation. There are major worries about creating personal liability without control for personal representatives, whether executors or administrators. Personal representatives, as we've heard, are legally obligated to gather all the assets, settle any liabilities, including inheritance tax, and distribute the remainder of the estate to the beneficiaries. They are personally liable if they do not set aside enough money to settle all financial liabilities, including IHT. Experts have warned that being personally liable for IHT on a pension fund that never comes into their hands leaves the door open to costly and protracted litigation and will understandably make personal representatives, such as professionals or friends of the deceased, much more cautious before they distribute all of the estate. Even more concerning is the fact that if representatives discover a new pension fund after settling the initial IHT liability, this will have a knock-on effect not only on the estate but on all other pension funds. It means that IHT will have to be recalculated for every part of the estate and every pension fund. It is far from uncommon for people to have had different jobs with separate pension plans, so the risk of miscalculation is obvious. If someone passes away before they've had the chance to consolidate their pension funds, tracking down these unused pots within 6 months of their death will be very difficult for executors and will mean that the initial IHT calculations could be wrong. The government must recognise and amend this. If it doesn't, and ministers simply ask future executors to sign some sort of disclaimer form, the government will soon find that nobody will want to take on that role. Our amendments in new clauses 18, 19 and 20 raise the clear need for significant reforms and are a means of pressing the government to protect individuals from being liable for private pensions they didn't know about and couldn't reasonably know about either. Finally, Madam Chair, there is widespread worry that family members might have to wait up to 15 months before they are able to access their inheritance during what is bound to be a hugely straining period of loss and grief. Our proposed NC20 urges the government to recognise that reality and take steps to address it.
Minister.
Madam Chair, thank you. And let me begin by thanking honourable members for their contributions to today's debate on these clauses. And I will respond to each of the specific points that have been raised, but I want to first reflect briefly again on what I set out at the outset as being the core purpose of this bill. This bill contains fair and necessary reforms to the tax system, which unfortunately have been ducked for far too long. They will help to strengthen our economy for the long term, ensuring that we can cut the cost of living and inflation, restore our public services to health, and restore the public finances to health too. And the Tories and Reform, who indeed are increasingly indistinguishable, it might be said, have already set out their choice, a return to the chaos and indeed to the instability of the past as well. That approach failed before and we're not going back. The clauses we've debated today restore pensions, as I said, to their core and intended purpose, which is funding retirement, not allowing them to function as a tax-free vehicle for the transfer of wealth. And generous tax relief for retirement saving is preserved. The clauses presented today ensure that pension wealth is treated fairly and consistently for inheritance tax purposes. They protect ordinary families with more than 90% of estates still paying no inheritance tax at all each year after these changes. Madam Chair, I'll now turn to the non-government amendments tabled for this session. And new clause 18 would require the Treasury to review the effects of the changes to pension tax policy, including their impacts on individuals, administrators and behaviour. A report would need to be laid in Parliament no later than 6 months from the date that the clauses come into force. Madam Chair, this amendment is not necessary. The Government has published a tax information and impact note in the normal way on these changes, and this sets out the impact on individuals, households and families, and it also accounts for the impact on personal representatives too. The Government also, as honourable members know, keep all tax policies under review through the monitoring of returns and communication with representative bodies and taxpayer groups. A review within 6 months of the policy taking effect on the 6th of April 2027 is not practical, not least because the data relating to inheritance tax in 2027-28 will not be fully available until the summer of 2030. This is the normal timescale and operates because tax liabilities data is only available with a long lag, including because the filing of the relevant inheritance tax accounts is due 12 months after a death. And for those reasons, Madam Chair, I therefore move that new clause 18 should be rejected. Madam Chair, I'll now turn to new clause 19, which would require the Government to report on the impact of the reforms on personal representatives. This would include the personal liability for tax on pension assets outside of the estate and any practical difficulties of identifying and valuing multiple pension arrangements within existing time limits. These changes that this bill brings about are consistent with the process which already exists for administering estates and paying any tax due. Personal representatives are already responsible for administering the rest of the estate, including non-discretionary pension schemes, which are already, as I said, within the scope of inheritance tax. The government has acknowledged that there are some challenges for personal representatives, and the changes announced at budget mitigate the risks to personal representatives by providing them with the ability to direct pension scheme administrators to withhold taxable benefits for up to 15 months from the date of death, and indeed to direct them to make payments of inheritance tax directly to HMRC. This will, of course, not apply to pension benefits which are exempt from inheritance tax, including those being left to a spouse or civil partner, pension funds under £1,000 and continuing annuities. The government will also publish regulations this year to provide the right framework to allow personal representatives and pension schemes to exchange all of the necessary information for inheritance tax purposes. The changes announced at Budget 25 also protect personal representatives from the risk that pension pots emerge later. And for these reasons, Madam Chair, new Clause 19 is not necessary and should therefore be rejected. Madam Chair, new Clause 20 would require the Government to review the tax administration arrangements relating to inherited pension pots with a focus on any delays in the payment of inherited pension pots caused by tax administration processes. HMRC would be required to publish the outcome of the review within 12 months of the passing of this Act. The Government does not want payments to pension beneficiaries to be delayed unnecessarily, and in the vast majority of cases, payments will be made as soon as pension schemes have completed their discretionary processes. Pension benefits that are exempt from inheritance tax, such as payments to spouses and civil partners, or death in service payments, can still be paid as soon as the pension scheme is ready to pay. We do, of course, need to strike a fair balance between beneficiaries of the pension and of the wider estate. And that's exactly why we announced that personal representatives will be able to direct pension schemes to withhold 50% of the taxable benefits for up to 15 months if they reasonably expect inheritance tax to be due. Pension beneficiaries will therefore still be able to access 50% of their taxable pension benefits as soon as their pension scheme is ready to pay, and the remainder once the inheritance tax on the pension has been paid, or indeed the notice to withhold has been withdrawn. And as I've set out, to ensure that the process of calculating, reporting and paying inheritance tax does not take any longer than necessary, the Government will introduce regulations setting out deadlines for the parties involved to exchange information. New Clause 20, Madam Chair, should therefore be rejected. Moving to new Clause 22, this would require the Chancellor of the Exchequer to make a statement on the effects of the policy on pension saving levels, household saving decisions and personal representatives, and this statement would need to be made within 6 months of the Act being passed. It's very important to emphasise that the intended purpose of pension savings, and indeed one that this Government wholly supports, is to fund retirement, and that is why, to address the Shadow Exchequer Secretary's point, we continue to incentivise pension savings with tax relief on both contributions to pensions and the growth of funds held within a pension scheme. And those reliefs totalled £78.2 billion in 2023-24. Estates will continue to benefit from the normal nil rate bands, reliefs and exemptions available. For example, the nil rate bands mean an estate can pass on up to £1 million with no inheritance tax liability, and the general rules mean any transfers, including the payments of death benefits to a spouse or civil partner, are fully exempt from inheritance tax. Madam Chair, as I said, 90% of UK estates will continue to have no inheritance tax liability whatsoever following these changes, and the reforms will only affect a minority with inheritable pension wealth. New Clause 22, Madam Chair, should therefore be rejected. Moving now to new Clause 23, which would require the Chancellor of the Exchequer to undertake a consultation before the 6th of April 2027 on the potential impacts of these changes. The consultation would consider the extent to which the changes to inheritance tax on pension interest deliver better outcomes for UK savers and pensioners. The government did indeed launch a technical consultation on the day of autumn budget 2024, following the announcement of the policy to draw on the expertise of tax, legal and pension industries. That technical consultation was focused on the processes required to implement the changes, and the government has made changes as a result of that consultation. As well as the technical consultation on these changes, there's been extensive and regular engagement with stakeholders from both the pensions industry and legal and tax representatives too. And I note the praise for HMRC officials from witnesses at the Economic Affairs Finance Bill Subcommittee in the other place as to how they've engaged on these issues over the course of the last year. Madam Chair, the policy problem with the inheritance tax treatment of pensions is well understood, and we need to ensure that pensions continue to be used, as I said, for their core purpose, which is funding retirement, and that tax reliefs are directed to that effect. And as I've set out, Madam Chair, pensions will continue to enjoy significant tax benefits. For those reasons, new Clause 23 should be rejected. Turning lastly, Madam Chair, to new Clause 24, which would require HMRC to publish comprehensive guidance on the implementation of the policy within 6 months of the Act being passed. It also requires that HMRC establish a dedicated helpline for inquiries relating to inheritance tax on pension interests. As I've set out, Madam Chair, comprehensive guidance will be published in advance of April 2027, and HMRC will provide interactive tools to support personal representatives. Publishing guidance when policies go live is, of course, established practice and ensures that guidance is fully up to date when made available. However, HMRC will continue to work with industry on shaping this guidance and ensuring that the reforms are fully understood. People will be able to call the inheritance tax helpline for inquiries related to these reforms, and as you would expect, staff will be fully trained on each of these changes such that they can support customers. It's on this basis, Madam Chair, that new Clause 24 should also be rejected. And Madam Chair, with these clauses, generous tax relief for retirement saving is preserved. I therefore urge the House to reject new clauses 18 to 20 and new clauses 20 to 24, and I beg to move that clauses 63 to 68 stand part of this bill.
The question is that clause 63 stand part of the bill. As many as are of that opinion say aye. Aye. Of the contrary, no. No. Division. Clear the lobby. Is that clause 63 stand part of the bill. As many as are of that opinion say aye. Aye. Of the contrary, no. No. The tellers for the ayes are Mark Ferguson and Taiwo Owatemi. The tellers for the noes, Lincoln Jock and Alicia Kearns.
The ayes to the right, 348. The noes to the left, 167.
The ayes to the right were 348. The noes to the left, 167. So the ayes have it. The ayes have it. Unlock. Thank you. With the leave of the House, I shall put together the questions that clauses 64 to 68 stand part of the bill. The question is that clauses 64 to 68 stand part of the bill. As many as of that opinion say aye. Aye. Of the contrary, no. I think the ayes have it. The ayes have it. New clause 24 has been selected for a separate decision. I call James Wilde to move the new clause 24 formally.
HMRC guidance on inheritance tax on pension interests.
The question is that new clause 24 be read a second time. As many as of that opinion say aye. Aye. Of the contrary, no. No. Division. Clear the lobby. The question is that new clause 24 be read a second time. As many as of that opinion say aye. Aye. Of the contrary, no. No. The tellers for the ayes are Lincoln Jopp and Alicia Kearns. The tellers for the noes, Mark Ferguson and Taiwo Owatemi. Order, order.
The ayes to the right, 184. The noes to the left, 331.
The ayes to the right were 184, the noes to the left 331, so the noes have it, the noes have it. Unlock. We will now move to gambling duties, and we begin with Clause 83, Stand Part, with which it will be convenient to consider the clauses stand part, schedule and new clauses on the selection paper. The question is that Clause 83 stand part of the bill. I call the Minister. Lucy Rigby.
Yeah. Thank you very much, Madam Chair. And I now turn to the fifth session of the House on the Finance Bill. And the clauses before us, clauses 83 to 85 and Schedule 13, make changes to the gambling duties regime to better reflect the modern gambling market and raise over £1 billion a year to support the lifting of the two-child benefit cap. I'll first speak briefly to the broader context for the package and then turn to each clause. Gambling is a significant part of the UK economy, generating an annual gross gambling yield of around £16.8 billion in 2024-25, according to figures from the Gambling Commission. The industry has changed markedly in recent years, while the duty system has not changed since 2019. Most notably, there's been a structural shift from in-person to online gambling. And between 2015 to 2025, remote gambling grew by 80%, whilst land-based gambling has declined by 10%. And at the same time, evidence of gambling-related harms has become even more clear. The estimated cost to government and society of gambling-related harms in England alone is between £1.05 billion and £1.77 billion a year. NHS figures show that over 40% of gamblers using online slots, bingo or casino games are considered at risk, compared to less than 15% of those betting in person on horse racing. And referrals for gambling addiction have risen sharply. NHS England has doubled the number of clinics for problem gambling. And I'm very grateful for the representations of so many MPs and campaigners on this matter, alongside those with constituencies where horse racing plays an important role in their communities and indeed in their local economies as well. At budget, the Chancellor made it clear that changes to gambling taxation are fair, proportionate and they are for a purpose. They will directly contribute to lifting an additional 450,000 children out of poverty, and this government is very proud of that. The opposition unfortunately showed little regard for child poverty when they were in government, and it's entirely in character, albeit no less shocking, that they oppose this government's changes and indeed would increase child poverty as a result. More brazen, though, Madam Chair, is reform. I will.
Can I thank the Minister very much for giving way during an excellent speech, introducing what I think is an extremely positive change. As someone, and I know there are many members across this House who have campaigned for some years to ensure that the most harmful and addictive forms of gambling attract the tax commensurate with those harms, I and I'm sure those other people who have campaigned on this issue welcome this measure. As a member of the Treasury Select Committee, we wrote a report just before the budget recommending this change. I'm very glad to see it. I wonder if the Minister can confirm, as she's already said, that some of the revenue raised will be used to help the government reach its objective of lifting 500,000 children out of poverty. How does that relationship work, though? Because the Treasury clearly doesn't want to see hypothecation of that sum. How does the connection between the money raised by this tax and lifting children out of poverty work?
Madam Chair, my honourable friend makes a very good point indeed, and the tax changes that we're making as part of this bill disincentivise the most harmful forms of gambling, and indeed we've also introduced, as well as statutory levy, to pay for the prevention of some of these harms arising in the first place, and of treatment as well. So, as I said, Madam Chair, my honourable friend makes an excellent point. I will.
The Minister has said that this tax change will disincentivise the most harmful form of gambling. Is there any evidence that she can cite today that will demonstrate that? I have no problem with taxing profitable industry to pay for the wonderful policies that we announced at the sector, but the OBR report actually says that there will be a drive towards the black market as a result of these taxation changes, which is much more damaging, much less revenue raising, and ultimately much more damaging to our economy.
Madam Chair, my honourable friend raises a good point, and as I said, NHS figures show that over 40% of gamblers that use online slots, bingo and casino games are considered at risk, compared, as I said, to the 15%, less than 15% of those betting in person on horse racing. So there is indeed an important contrast, and the NHS figures bear that out. Now, Madam Chair, I was talking about the two-child cap, and I was just going to say that more brazen, in fact, is Reform's position on this, who actually went into the election promising to scrap the two-child limit, but who have now abandoned that position and will be traipsing through the lobbies. We can only assume, with their ideological bedfellows, the Conservatives. Indeed, it's very hard to keep track of who is supposed to be sat on the opposition benches and who, indeed, will be up there on any given day. At Autumn Budget 2024, I will.
Honourable Lady for giving way. The Honourable Gentleman for Stoke-on-Trent South raised a very raised a very important point about the fact that the OBR was pointing out the fact that this would drive money towards the black market, potentially not benefiting the taxpayer and the Treasury as much as the Minister is saying in her speech. Can she just actually explain as to what she's going to do, the Minister is going to do in order to avoid the black market benefiting from these tax changes?
Madam Chair, the Honourable Member raises a good point, as indeed did my Honourable friend about the illegal market. But we are reassured by the fact that the illegal market, betting market in the UK, is relatively small, between 2 and 9% of legal online market stakes. And the Gambling Commission is already tackling this risk and seeking to protect consumers. And indeed, the £26 million over the next 3 years that we're providing, additional £26 million, I should say, that we're providing to the Gambling Commission, will go to better and further enforcement in this space against the illegal market, and I hope that reassures him. Madam Chair, as I was saying, at Autumn Budget 2024, the Government announced a consultation on modernising the tax treatment of remote gambling, including a proposal for a single duty covering all remote betting and gaming. And that consultation ran from April to July 2025. Respondents strongly opposed a single duty, arguing that remote betting and gaming significantly differ in operating costs and in harms too. The Government has listened to those concerns and is not proceeding with a single remote betting and gaming duty. Instead, this bill implements a targeted package of rate changes that will raise over £1 billion a year. It focuses increases on remote gambling, which has grown significantly. It protects UK horse racing, and it supports lower risk community-based activities by abolishing bingo duty. Madam Chair, I'll now turn to the individual clauses in this bill. The changes made by Clause 83 will increase the rate of remote gaming duty, which applies to online games such as slots and roulette, from 21% to 40% on the 1st of April 2026. Remote gaming has relatively low operating costs and has grown rapidly in recent years, with gross gambling yield rising significantly above inflation from £2.5 billion in 2015-16 to £5.2 billion in 2024-25, based on Gambling Commission figures. And it's associated with higher rates of gambling-related harm, as I said, higher rates relative to other products. NHS data shows that online slots and casino games have much higher proportions of problem gamblers, as we've been discussing, than, for example, betting on sports. And it's by increasing the rate on remote gaming more significantly that this measure intends to reduce the incentive for operators to push customers towards higher harm products. Clause 84 will increase the rate for remote betting. So general betting duty is currently charged at 15% for both remote and in-person betting. But the betting market, as I said, has changed very significantly in how it operates. And Clause 84 will create a new higher rate of general betting duty that will apply to bets placed remotely, such as online sports bets, from the 1st of April 2027. The new remote rate will be set at 25%, while the existing existing 15% rate will continue to apply to bets placed in person in licensed betting premises. The new 25% rate will not apply to remote bets on UK horse racing. Those bets will remain taxed at 15% in recognition of the fact that operators already pay the 10% statutory horse race betting levy on horse racing bets, creating, of course, a de facto 25% burden when the 15% levy is taken into account. And the new remote rate will also not apply to bets placed via self-service betting terminals in UK licensed betting premises, pool bets and spread bets too. Finally, Madam Chair, Clause 85 will abolish bingo duty. Bingo duty is currently charged on the gross gambling yield from bingo, including in dedicated bingo halls. Bingo is a much lower risk, community-based form of gambling, often providing an important social outlet and supports local venues, including for around 250 bingo halls right across this country. So Clause 85 and the associated Schedule 13 will abolish bingo duty with effect from the 1st of April 2026. And the bill also makes consequential changes to ensure that bingo played in UK licensed bingo halls does not become liable to other taxes or duties as a result of this abolition. This government knows the importance of bingo halls in our communities, and we're proud to back them with this tax change. I will give way.
Deputy Speaker, and I congratulate the Minister on the changes that the government has made and in tackling the online gambling harms and also excluding the bingo halls, which, as you say, is a community often and it involves a lot of people. Does the Minister kind of agree with me that it's not just online, it's also offline, and if we should consider, and if the Minister would consider ensuring that we make our high streets a bit safer when it comes to gambling and look at erasing the aim to permit from the Gambling Act 2005 as the next step?
Yeah. Madam Chair, I confess to my honourable friend that I think I need to write to her on that specific issue because I don't have notes in front of me to that end. But the principles that she raised, I think we are on the same page as to the values that you are seeking to put forward, and I welcome the congratulations that or the welcoming of this bill, I should say. Madam Chair, taken together, clauses 83 to 85 modernise the gambling duties regime. They raise, as I said, over £1 billion a year to support public services and to lift children out of poverty. They focus tax increases on higher harm, fast-growing online products, whilst protecting UK horse racing and land-based betting and supporting bingo halls too. So I therefore move that clauses 83, 84, 85 and Schedule 13... I will.
Thank you, Madam Speaker. I'm grateful to my honourable friend for giving way. Bet365 is one of the, based in my honourable friend's constituency, just for clarity, but is one of the largest private sector employers in Newcastle and Lyme, which wasn't in my honourable friend's notes. And I wonder if the Minister will be able to touch on a little bit of the engagement with some of these companies to make sure that the impact on the workers, many of whom will live in my constituency and indeed my honourable friends, won't be adversely impacted.
Thank you, Madam Chair. And my honourable friend raises an important point, which is, of course, around jobs in this industry. He'll be aware that employment in the gambling industry as a whole has declined by around 20% between 2015 and 2023. So it is in gradual decline, then that trend, of course, predating this finance bill. Those jobs in his constituency are incredibly important, and that's why the measures in this bill deliberately focus on online gambling rather than on betting shops and casinos, which support more jobs and face higher operating costs, as I'm sure indeed do the institutions in his constituency. I will give way.
For giving way, but in Staffordshire and in Stoke-on-Trent Central, specifically, 5,500 people are employed by Bet365. This isn't just a significant employer, it is the most significant employer. I wonder what actions or interventions the Treasury is looking at taking to try and offset some of the potential job losses that these policies are going to cause.
Madam Chair, as I said, employment is indeed an important consideration, and it is one that has been borne in mind for the purposes of this bill. That engagement, there has been considerable engagement on all of these issues, and if the honourable member seeks further engagement, then I'm more than happy to do that. Madam Chair, I was just concluding and moving that clauses 83, 84, 85 and Schedule 13 stand part of this bill.
Shadow Minister James Wilde.
Thank you very much, Madam Chair. And these changes were presented as some sort of simplification and modernisation, but clauses 83 and 84 of this bill nearly double remote gaming duty from 21% to 40% and increase general betting duty to 25%. We will have some of the highest rates of tax on gambling in the world. And the industry, as we've heard from some members already, have warned that it could have severe consequences for an internationally competitive sector that supports tens of thousands of jobs, underpins horse racing and other sports, and contributes significantly already to the Treasury. So it is questionable if these measures will actually lead to stable, long-term revenue gains for the Exchequer, and there is a very real risk they result in job losses and greater use of unregulated operators in the black market. I'll be speaking to new clause 25, which would require the Chancellor to come back and explain what the consequences have been for revenue, for sports and horse racing, for high streets betting shops, the black market jobs and the public finances. Of course, the origin of these changes owe much to Gordon Brown, who encouraged the Chancellor to hike taxes in order to increase welfare spending. And proponents of higher taxes often suggest they will not have any consequences, but it's the role of us in this House to scrutinise potential changes and then to assess what the impact has been after the event. But independent modelling from EY, shared by the Betting and Gaming Council, suggests the impact of doubling remote gaming duty could be the loss of 15,000 jobs. A further 1,700 jobs could be lost from the increase in general betting duty. In total, that's 17,000 positions located in Stoke-on-Trent, Leeds, Sunderland, Manchester, Nottingham, Newcastle-under-Lyme, Norwich and other areas which could all be affected. Of course, these are simply projections. They could be proved to be pessimistic, and we certainly hope that to be the case. When unemployment has risen consistently under this government due to the jobs tax and other costs, the warning should not just be dismissed, which is why the Chancellor must account for the impact of her choices as required by the amendment. There's been some mention of horse racing. I was pleased to join with colleagues across the House who supported the AXE, the racing tax campaign, another tax that the Chancellor wanted to introduce, but she was forced into one of her all too regular U-turns.
Exactly.
I'll happily give way to the honourable gentleman.
Does he accept that the consultation to harmonise gambling taxes, which the horse racing industry was most opposed, was first proposed by his government, and it's something that they were proposing that we have just inherited?
Well, we're debating the measures in this bill which were brought forward by this government. I wasn't involved in the changes that he was proposing. I certainly wouldn't have supported hitting the horse racing sector in the way it was proposed, and I don't remember it being in a previous finance bill in a previous government. So it's this government that sought to bring forward those measures, and they were roundly rejected because horse racing supports around 85,000 jobs and contributes £300 million in tax revenue every year. But despite the climb down in exempting horse racing from the higher rates, the industry could still feel the consequences of this government's approach to gambling duties, because when the online betting sector is squeezed, what happens? Sponsorship is likely to be reduced. And because racing's funding depends heavily on those partnerships and putting on the sponsorship, we could see an impact in racing. And in my own area of Norfolk, we're very fortunate to have Fakenham races, where I went and supported the campaign by the British Horse Racing Association against the government's plans. And that's a venue that's synonymous with the area, and the identity it is a source of local employment, not just for people who are at the track itself, but to the farriers, to the pubs, the hotels, and the whole ecosystem that supports racing. And that's why these clauses in the bill continue to pose a risk to the sector and other sports, and that needs to be accounted for. Turning to one of the issues that's been raised, namely the black market, which the honourable member for Stoke-on-Trent Central raised, as did my right honourable friend for Stone, Great Wireley and Perkbridge. And the government has acknowledged there are risks associated. Have I got that right? It was close. Okay. The government has acknowledged the risks associated with taking this approach, which is why they quietly set aside £26 million for the Gambling Commission to combat black market expansion. But the same EY analysis suggests that over £6 billion in stakes could migrate to the black market, doubling its current size and undermining progress made through the existing regulatory framework. And the OBR itself has identified leakage potentially around £500 million in lost revenue as activity shifts away from properly regulated markets. So those projections, again, they could be wrong, but they could be right, raise legitimate questions about the overall effectiveness of the government's approach. When taxes rise too far, behaviour can change and actually the yield can go down, and that's what we'll see with a number of the tax rises that the government has got in this finance bill. And rather than reducing demand, activity will move to unregulated markets where the consumer protections are weaker, fraud risks are higher, and tax revenue is not collected. And I'm not sure we've heard a convincing response from the Minister about how that will be addressed and whether those risks have actually been taken properly into account. And let's look at what happened in the Netherlands when the Dutch government last January raised its remote slots tax rate to 34%. Within months, gross gaming revenue fell by a quarter and gambling tax receipts dropped to just 83% of the previous year, leaving a £200 million shortfall in the projections. And somewhat predictably, the Dutch regulator then reported a huge growth in the number of people accessing unlicensed domains, rising from 200,000 to 1 million. So this should serve as an example as to why we should have caution for the Chancellor's plans. And experience suggests that changes have unintended consequences and those risks must be carefully assessed. So I hope in winding up, the Minister will provide a bit more clarity about how that will be monitored and what steps the government will take if it proves to be the case and those projections prove to be accurate. There's also some debate and confusion in the sector and some of the professional bodies about the treatment of free bets and free plays, which both the sector and those bodies have raised concerns because the budget costings document calculates gambling duty using the gross gambling yield, which is the revenue retained by operators after paying out winnings to customers. However, current law uses a wider measure which also counts the value of free bets and free plays, which means there is a potential mismatch. So I'd be grateful if the Minister could clarify that, and I'm sure she's had representations on it directly. Madam Chair, we need to strike a balance in levels of taxation. Industry is warning these increases will lead to job losses, impact on sports, and lead to more black market activity. Therefore, new clause 25 seeks transparency and an answer to those concerns. It asks the Chancellor to assess the impact of these changes, these rises on jobs, horse racing, the black market, jobs and the public finances. That is the minimum that Parliament should expect, and I hope honourable members will support our new clause.
Lizzi Collinge. Thank you, Madam Chair. I want to speak today on clauses 83, 84, 85 and Schedule 13, which respectively outline an increase in tax on online gaming, for example online slots or casino games, a new rate of general betting duty specifically for online betting, for example placing a bet on a football match, and removing bingo duty. Online gambling has evolved very quickly and legislation has simply not kept up. Before you might pop down to your local high street betting shop or organise a trip with your friends to the casino, it was confined to a specific place that you had to go to and then at some point leave. That doesn't mean there was no problem gamblers, of course there were, but it did impose necessary social and physical limits on gambling. And online gambling has changed this beyond all recognition. Now that casino fits into your pocket. Online platforms know your habits, when you use your phone most, when you haven't gambled in a while, and they can tailor notifications to pull you back in. The technology is designed to prey on human instinct, using algorithms that make betting time-sensitive, compulsive, and constantly available. And in case the opportunity to gamble ever slips your mind, gambling companies will be sure to remind you in a commercial break for sports matches, on the side of buses, and emblazoned on the microphone at Premier League post-match interviews.
You might see some of the seemingly generous offers they give you. For your first £5, they will give you £100, even £200 credit to gamble with. And that feels like a lot of money to most people. But it's pennies compared to what they are making on their current customers and what they might make from you once you're hooked. And as someone who, to be frank, doesn't really like gambling, I don't gamble, and I don't really understand why people enjoy handing their money over to betting companies. I really detest the tactics used by gambling companies to pull people in. As online gambling has evolved exponentially, the online platforms have been able to get away with, in my opinion, dodging responsibility for problem gambling, or in paying their fair share into the Treasury. As my dad always says, you never meet a poor bookie. And that's why I support Clause 84, which will introduce a new higher rate of tax on remote betting, so that online bets are more expensive compared to in-person betting. These taxes will be paid by the platform so we can catch up finally with the reality of the gambling world, which has moved far beyond the traditional model of shops and casinos the tax system was designed around. Now, Clause 83 raises the rate of remote gaming duty, the tax on online slots and casinos. By doing so, it reduces the incentives for operators to push the most harmful forms of online gambling, making the system fairer and safer for everyone. I represent Morecambe, Madam Chair, a seaside town which has a host of gaming businesses on the front and a bingo hall. And the evidence shows it's not the penny slots or weekly bingo games that drive the majority of problem gambling. So I'm very pleased that the new remote gaming and betting duties recognises this. A focus on the evidence base is really clear from the government's responsiveness to feedback from the consultation undertaken on gambling, where it was shown that different forms of gambling carry different levels of harm and, of course, costs to operate. So instead of imposing a flat rate across the sector, this government will be taking a more nuanced approach, imposing the highest rates on remote gaming, which carries the biggest risk of harm, whilst protecting lower harm forms of gambling, such as your local bingo hall. Part of the revenue raised will go to research, prevention and treatment of gambling harms. And this replaces a voluntary system that some operators exploited, contributing as little as £1 a year. These new levies will take into account differences in operating costs and the different levels of harm across gambling activities. And under these new measures, it's estimated that £810 million will be generated in 26-27, rising to £1 billion by 30-31. This is money that, as well as tackling gambling harms, can go into our NHS, our social care, our schools, and people will still be free to gamble if they choose. But these measures discourage the most harmful forms of online betting and gaming, while supporting lower-risk, community-focused activities. The abolition of bingo duty supports this approach, as well as protecting jobs and local social spaces. This measure is informed by Labour values. Madam Chair, we have a long-standing principle that the polluter pays. In this case, online gambling platforms are polluting people's lives, harming their health, draining their wealth and breaking up families. This must end, and clauses 83, 84, 85 and Schedule 13 will go some way to doing this.
Spokesperson Daisy Cooper.
Thank you, Madam Chair. We Liberal Democrats have long campaigned to double remote gaming duty, and we are grateful to the government, which has finally listened and taken that on board. This is a measure that will raise vital revenue in a fair way, whilst addressing the eye-watering profits of the big online gambling companies and standing up for the thousands affected by problem gambling. According to the latest figures from the Gambling Commission, the online gambling giant saw revenues reach an eye-watering £7.8 billion in 2024-25. Meanwhile, Public Health England has estimated that gambling costs the UK economy around £1.4 billion a year through a combination of financial harms and the impact on physical and mental health, employment, education and crime. And around 300,000 adults in Britain experience problem gambling, as well as roughly 40,000 children. These figures are stark, and this measure finally takes action that should have been taken a long time ago, and it will raise around £1.8 billion a year by 2029-30 to fairly fund our public services. But, Madam Chair, buried in the fine print is a detail that makes it seem as if the government is giving the big online gambling firms a get-out. So I would be grateful to the Minister for some clarification. The budget policy costings document states that the tax base for this measure is the gross gambling yield. Gross gambling yield is the revenue retained by gambling operators after paying out winnings to customers. However, the tax base for remote gaming duty as defined in the Finance Act 2014 is a larger tax base. It is known as the gross gambling revenue. This includes the notional stake value of free bets and free plays. So can the Minister explain why today's tax measure will apply to a narrower tax base than the one currently targeted by remote gaming duty? How much tax revenue has been foregone by this narrowing of the tax base? Was it unintended, or was it a result of influence from the sector? And can the Minister confirm whether these big online gaming duties met with any ministers and discussed these measures whilst they were being considered? New Clause 21, tabled in my name, seeks to clarify this situation, requires the Chancellor, within 6 months of the passing of this Act, to undertake an assessment of the impact of the implementation of Sections 83 and 84 in respect of the treatment of free bets and free plays for calculating general betting duty on remote bets, so we can see clearly what the impact of this difference will mean.
Alex Ballinger.
Thank you, Madam Chair. And I want to speak today in support of clauses 83 and 84 on gambling taxation. And of course, I strongly welcome these steps which relate to remote gaming duty, covering online slots, online casino games and other high-risk remote gambling products. Ahead of the budget last year, I was one of more than 100 Labour MPs that wrote to the Chancellor alongside Gordon Brown, calling for a different approach to gambling taxation, one that recognises the reality of the modern gaming industry. We highlighted how taxing the social ills caused by online gambling could pay for the abolition of the two-child benefit cap, and I strongly welcome the action the Chancellor has taken to lift hundreds of thousands of children out of poverty on the back of these changes. For us, fairness was not just about asking those with the broadest shoulders to contribute more, it was about ensuring those whose business models generate the most harm make a proper contribution to the cost of that harm. Which is why Clause 83 is so important, as it targets the most addictive and dangerous forms of gambling, online slots and casinos. As a country, we are experiencing record levels of harm caused by gambling, and the Gambling Commission's own figures tell us that 2.5% of adults, which is more than 1 million people, are suffering from serious gambling harm. There are many types of gambling harm: debt, family breakup, crime, and at the most severe end, suicide. And so it is extremely worrying that the Royal College of Psychiatrists have seen a threefold increase in those referred for gambling treatment since gambling moved online during the pandemic. In my own area, the Dudley-based Gordon Moody charity, who provide gambling treatment centres all over the West Midlands, have seen a large increase in referrals, most worryingly amongst younger people involved in online gambling. This is not a coincidence, of course. Online slots and casinos are designed to be high-speed, continuous, psychologically manipulative, and for many, overwhelmingly addictive. So the Chancellor's decision to increase remote gaming duty targeted at these most harmful forms of gambling is absolutely the right thing to do. It sends a clear message that the tax system must reflect the level of harm caused. But there is another reason this charge, as well as Clause 84, which increases general betting duty, is the right thing to do. And that's because many online gambling operators, particularly these large global operators, have spent years offshoring their profits, booking revenues overseas, minimising their UK tax liabilities, and contributing very little in terms of meaningful employment or investment in our communities. In one example, at the end of last year, the online operator Skybet moved its headquarters to Malta, specifically to avoid UK corporation tax, cutting its contribution to the Treasury by tens of millions of pounds. And in another example, there was an unnamed online bookmaker being investigated by the Gambling Commission for illegally directing customers to offshore-based platforms, indeed the black market itself, to avoid paying UK tax and to avoid UK regulations. Increasing these online duties means it will be harder for unscrupulous operators to avoid tax by moving operations offshore. Online gambling in the UK will be taxed fairly in the UK. Raising remote gambling duty to 40% and general betting duty to 25% for remote bets also puts us on a footing much closer to other European jurisdictions and many states in the United States. Until the budget, the UK was behind the curve in taxing these highly harmful online products. For us, the Chancellor's move is not just a matter of revenue, it's also a matter of fairness, responsibility, and aligning our tax system with the reality of modern online gambling. But, Madam Chair, taxation is only one element of harm reduction. Raising duty alone, of course, will not prevent gambling addiction. It will not stop children being exposed to online gambling advertising. It will not ensure that families receive the support they need when a loved one falls into crisis. What we do need, if we are to tackle these harms, is a public health approach. That means proper funding for treatment, and I welcome the steps already taken under the statutory levy, but it also means serious investment in prevention, community education, early intervention, and a modern regulatory framework that puts people, not profits, first, fully independent of the gambling industry. I want to highlight another pressing issue for the Minister, the continued prevalence of the B-free gaming machines on physical premises. These high-intensity machines, so often located in areas with higher deprivation, continue to cause significant harm, yet they remain under-regulated and under-taxed relative to the risks that they pose. If we are to take harm seriously, B3 machines should be included in the next phase of gambling tax reform. Finally, Madam Chair, in the last Gambling Act was introduced more than 20 years ago, in a completely different era, before the smartphone, before the expansion of data-driven behavioural targeting, and before 24/7 online casinos in your pocket. A new act is clearly needed. Our laws have not kept pace with technology. They have not kept pace with the scale or sophistication of online gambling operators, and they have not kept pace with the reality of the harm we now see every day in communities across the country. So while I welcome these measures in the Finance Bill, I urge the Government to move quickly to update advertising rules, to strengthen affordability checks, to protect children and vulnerable people, and to ensure that tax policy regulation and public health strategy on gambling are all aligned. Madam Chair, these measures on remote gaming duty and general betting duty are excellent steps in the right direction. They acknowledge the reality of harm, they strengthen fairness in our tax system, and they take us closer to a modern framework that puts the well-being of the public first.
Dame Caroline Dinage.
Thank you very much, Madam Chair. I'd like to speak on in support of New Clause 25, which would require the Government to assess the effects of an increase in gambling duty, because just as I believe that individuals have a right to spend their hard-earned money as they like, I do believe that it's important they do so in a very sensible and regulated and safe environment. But whatever we might think about gambling companies, gambling is already a very heavily regulated sector. Since the Gambling Act 2023, passed by the last government, the industry has already absorbed over 62 policy changes. These changes include limit on slot stakes, financial risk checks on transactions, tightened market rules, and of course the statutory levy. The sector is so well regulated that the Culture, Media and Sport Select Committee warned the last government that the finance risk checks should be as minimally intrusive as possible. And as chair of the committee, we concluded that the government must strike a careful balance, preventing harm for all while allowing those who gamble safely the freedom to continue to do so. And I do have concerns that this vast increase in taxation on online betting and gaming doesn't strike that balance. The combination of the existing regime of regulation that is strong and a sudden jump in the levels of remote gambling duty from 21 to 40% is the kind of environment that I believe risks pushing people into the black market. As a floor, 40% is very high for remote gaming by international standards, and it's been suggested that such high taxes could double the size of the online black market. I wondered if the Minister recognises, as the Shadow Minister highlighted, research from the Netherlands that found that after steep tax rises were introduced on remote slots, there was visits to black market domains increased fivefold over a 3-year period. And this is what we have to worry about if we're concerned about the oversight of those making bets and playing slots. It's why I'm supportive of New Clause 25 tabled by the opposition. It requires the Chancellor to assess and report back on the effects of the increase in gambling duties on things like the number of high street betting shops, on the black market, on the employment rate, on the public finances, and on sports and horse racing. When it comes to sports and horse racing, I was glad to see a carve-out for UK horse racing from general betting duty. I was among the many members calling for this in recognition of the unique place that horse racing occupies in British cultural life, as well as the 85,000 jobs and £4 billion contribution to the economy that horse racing offers. But the government has slightly dressed up its raid on gambling companies as being driven by concerns around gambling harms. In November 2024, I spoke at the BACTA convention about the then recently announced statutory levy and my concerns with how it would be distributed to organisations that conduct this harms research. The committee has recommended the year before that the government ensure that service providers that were operating via the voluntary funding system were adequately supported to make the transition to the statutory levy. However, we've now received very concerning reports that especially voluntary organisations are facing a funding cliff edge with delays and a lack of information about the transition to levy payments from the NHS. I'm not entirely sure the Minister is listening to what I'm saying, but I'm hoping she'll be able to address this, because she hasn't looked at me once while I've spoken, but hopefully she'll be able to, but hopefully she's writing furious notes about what I'm talking about, so hopefully she'll be able to address these concerns when she tells me that she will discuss with colleagues and act to ensure that no charitable organisation currently operating within the gambling harm prevention sector will have to fold due to delays within levy funding. Madam Chair, I know the Chancellor is looking around for money and believes that she can raise it from gambling companies, but as with many of her other measures, such as national insurance rises, she will be the victim of the law of unintended consequences if she's not careful. On this occasion, it is that more people will be dragged into the black market, where they will quite simply find better offers than those offered by gambling companies. And the black market is completely unregulated. There is no maximum stake limit. There is no financial vulnerability checks. There are no deposit limits or prompts or transparent spending summaries. And having taken the opportunity to speak with many of those who have been impacted by problem gambling, and in some cases the families of those who have been impacted in the most substantial way, people who've taken their own lives, Madam Chair, the black market is a wild west that any vulnerable person could very easily be drawn into, and these measures could represent a one-way ticket to that town. The government recognises this, I think, already in their own statistics. As the Minister said, they're earmarking an additional 26 million for the Gambling Commission to investigate this. So clearly they recognise it's a problem that needs to be kept an eye on. But you know, it's not. This is really, really important. And so, while the Chancellor believes that she's potentially pocketing a cool £1.1 billion from this increase, there's a risk that in reality she will lose out on the tax receipts from up to £6 billion diverted back to the black market. So, while she might think she's the winner, in actual fact, under her watch, once again, we'll all be losers.
Gareth Snell. Thank you very much, Madam Deputy Speaker. As has already been pointed out by a number of colleagues, my constituency is home to Bet365. It is. I would just say to my honourable friend from Hales Owen, because he did say something about how there is no meaningful employment. There are thousands of people in my constituency who put food, and my honourable friend from Newcastle, who put food on the table for their children because of the work and the job. Let me finish my sentence. Who put food on the table because of the job that they do in that industry. It's 109,000 people who go to work in that sector, whether it be a betting shop, a casino, a bingo hall, or in the high-tech companies like the one in my constituency. And to sort of say it's not meaningful does make this look like an ideological change rather than the point about taxation, but I will give way.
Giving way, the point I was trying to make, not at all that people that work in the gambling industry are not involved in meaningful employment, but the online sector, they represent less than 10% of jobs. And yet they make enormous profits. So in fact, by taxing online companies more, gambling companies are incentivised to put more people in the land-based gambling sector, which indeed could increase employment and would be good for people in his constituency.
Madam Deputy Speaker, that is frankly nonsense. There are 7,500 people who work in my constituency. That is 1 in 10 people, if they were living in my constituents, who get paid a salary that is greater than the average for the region. It is that company, whether you like gambling or not, Madam Deputy Speaker, that company, the people it employs, are driving economic regeneration of North Staffordshire, because those jobs are the ones that have the money to spend in our services, to spend in our shops, to spend in our social activities. And whether you want to make this a debate about the moral rights and wrongs of gambling, which I'm sure we don't because of the nature of the debate that we're having today, I do think we need to countenance the reality of the circumstances that are faced by some of the communities that host these companies as a result of these tax changes. And I congratulate the gentleman for being successful in his campaign to get to where we are today. But the consequences are going to be felt in my constituency with job losses. It is going to be felt with the fact that there are people who will not have a job this time next year as a result of the fact that the company that they work for will have to either reduce the number of people that they work for, or worst of all, some of them will move overseas. And there has been lots of comments about moving profits overseas and the prospect of bad actors. Actually, the one that's in my constituency is probably the exemplar of how to do it in terms of keeping the money in the UK. The owners of them, and they are paid incredibly well, still pay PAYE. They make a contribution to the state that is equal to about the size of my entire local government budget. The idea that these are not meaningful organisations is slightly disrespectful to the people that are there. And actually, the economic damage that would be happening in my city if they were to disappear overnight, which they could do, would be devastating and frankly would cost the government considerably more in a bailout that we would need than they would raise through this tax. I'd also, and the honourable gentleman from Dartford, I think it was Dartford, made the point about we don't do hypothecation in this country. We don't do hypothecated taxes. Now, I support every measure that the government has brought forward in terms of spending in the budget. The two-child benefit cap being lifted in Stoke-on-Trent Central will benefit 4,500 people. And my city has one of the highest rates of child poverty anywhere in the country, so the benefit that is derived by those families will be enormous and immediate. But I do think we've got to be very careful. Everything goes into one big pot and then everything goes out of the other pot. So to make it as if this is some sort of moral argument for that specifically tackling taxing gambling is the only possible way that we could fund and deal with child poverty in the country, I think it is a slight misnomer that we should be careful about. I also, having visited Bet365 and having seen the work that they do, they are worried about the impact that the changes will have on the black market. They spend as do the entire sector, spend an awful lot of their time and energy doing R&D to try and work out how to keep people working, how to keep people playing and betting in the regulated sector, where you have support for people that are at risk of gambling, where you can do the lockout mechanism for problem gamblers, and where the tax receipts from those people that bet goes back into the UK. £6 billion going into the unregulated sector is a huge potential loss to the Treasury. And we're all one or two clicks away from being in an unregulated gambling app. The Safer Gambling Week, the Betting and Gaming Council brought in a series of computers and asked people to look at two comparable gaming sites. And I will give away again. Let me finish my sentence. Without realising, you could easily be on one site that is not regulated, where the taxes, where the revenue stream is almost certainly going into completely dark activity, probably funding some sort of organised criminal activity, versus a regulated sector product that is with all the support and safety measures that comes. And because of the fact that you can proliferate these things on phones now, Madam Speaker, the access to it for everybody at all age is now much easier. So there is a genuine concern that we need to think about, which is if that is £6 billion that is going into the unregulated sector, if as a result of these tax changes that the OBR recognises there will be an increase in unregulated activity and problem gaming, is the £26 million for the Gaming Commission enough? Is the £1.1 billion raised by the statutory levy going to be sufficient? And as the Honourable Lady from Gosport has just said, there is genuine concern from some of the charitable organisations that are on the ground that they have not yet had their funding for this. They have not had a confirmation of how they will be able to spend it. Does it just get sucked into the NHS pot and be spent through a medical solution to this, which might be the solution? But that does mean that some of those very carefully crafted mechanisms to deal with gambling and problem gambling will simply lose out as a result of big structural changes to tax. And if the Honourable Gentleman wants to give way, I will allow.
Friend, and I'm starting to agree with him. I'm also concerned about the black market in online gambling, and I welcome the extra money that the Chancellor has introduced for the Gambling Commission, which has powers including blocking ISPs and blocking payments and doing other things to crack down on unregulated gambling. But one concern I wonder if he shares with me is the advertising of unregulated online gambling companies in the UK, including in the Premier League. Does he agree with me that the government should be doing something about that so we can support better the regulated sector?
Absolutely. I am an old-fashioned state regulator. I like the idea that the state can regulate things. I like the idea of tax and spend as well. That is what we are doing in this budget. It is good things. It's fun. I was so close to the South West Norfolk. I raised his hopes and I dashed them there and then. But But yeah, we do need that. But if you think about some of the changes that came through the white paper, the whistle-to-whistle ban on certain products being promoted, the voluntary opt-out that gambling companies do with the Premier League, the soon-to-be banning of gambling companies and football shirts, which uniquely again impacts on Stoke-on-Trent because Bet365 sponsors Stoke City. So should we ever make it to the Premiership, there would have to be a complete rechange of our kit. And we came so very close in the beginning of the season, but we're not quite there now. So there is more we can do around the unregulated sector, but that should be a collective effort. And we should also not kid ourselves that what we're doing today is to try and get on top of the unregulated sector. So what we're doing today is talking about the taxation of the regulated sector, and the consequence of that is that we are inadvertently pushing more people potentially to go into the unregulated sector, and the consequence of that will be bad for society, it will be bad for the people that are problem gamblers, and it will also be a challenge for the Gambling Commission to then regulate that, and we need to be upfront about that. The other point I wanted to pick up was we will have a perverse incentive where, and I recognise that those very addictive games that people can get hooked on and spend an absolute fortune on, because it does, as the Ombudsman said, have those psychological impacts of trying to draw you in and spend money and make it worthwhile. The machine gaming duty rate for that as a land-based product will be 20%. The remote gaming duty, the remote betting duty for if you want to put a bet on as a football match using one of the apps at home will be 21%. So but we recognise that the gaming side of this is much more damaging than the betting side of this. So we're actually going to have a lower rate for land-based gaming than we are for remote betting, when we recognise that betting as a product is a safer, more cost-intensive situation. And I do wonder whether that was by design by the Treasury or whether that's a consequence that hasn't been considered. If the Minister could potentially address that. I also wonder whether the Minister, because the Minister has said that this is a fair levy. We will be taking gaming rate to 40%. That will make us an outlier with our European neighbours. The next tiles will be sort of the Czechia with 35%, Netherlands with 34%, Denmark with 28%. There is obviously a point at which the taxation of a product becomes so de minimis in its return that it ceases to have an effect. I've never believed in the Laffer curve, but I can see where we're getting to a point on. Sorry to disappoint you again, Donald Denham again. That we get to a point where we are trying to squeeze an increasingly large amount of money out of a shrinking tax base because more people are taking their spend elsewhere. That would be damaging for everybody. It would be damaging for my constituents, because if the demand for the service and the products that are made by the companies in my constituency dry up, then those jobs also dry up. But it also be bad for the Treasury, because the amount of money they can raise from the regulated sector will decrease, and that is not something that we want to see. But I would also ask the Minister whether she's looked at the evidence that came from the Netherlands, because when the Netherlands increased their rates, and they raised it for good reason, they raised it to try and raise money to pay for parts of their social programmes. They did that as a decision around their tax and spend. What they saw was a huge increase into the unregulated sector. They saw a spike in their in the use of unregulated products by something like fivefold over 3 years, and they also saw a huge decrease in the expected rate of return for their revenue. And there are examples in other European countries where this is the case, and I do wonder whether we've looked at those before making some of the decisions that we are making today, and whether or not we have a contingency. I mean, not that we are hypothecating taxation in this country, but we have said this is to fund the quite right reduction of child poverty through removing the two-child benefit gap. If the revenue rates from these changes decreases, where is that additional money going to come from? And then finally, and I do wonder whether the Minister is able to touch on the impact that this has on Gibraltar, because with the decisions that we make today around the tax rates on gambling will have an effect on Gibraltar. Nigel Feetham, who is the Minister for Finance in Gibraltar, has pointed out repeatedly that in Gibraltar, 3,500 people derive their job from the gambling sector. It makes up 30% of their GDP. 1/3 of their tax receipts comes from the gambling sector. He has said only this week that it will remove tens of millions of pounds from the Gibraltar government's budget. And there's absolutely no way that they can replace that from domestic sources in any reasonable time. Now, given that Gibraltar is one of our important overseas territories, Can the Minister set out and explain when she responds what conversations she's had or the Treasury has had with counterparts in Gibraltar, what the contingency is if we find ourselves inadvertently creating a massive black hole in the Gibraltar government's budget, and again, if we have to in some way bail them out, where is that money going to come from? Because if that money is taken out of the revenue that is expected to be raised from this particular rate, that then undermines the figures for other parts of the budget, which in its entirety I support.
Thank you, Madam Chair. My constituents know all too well that there are some gambling companies that thrive on making vast profits from addiction, distress and despair, often delivered straight into people's homes through online platforms and their mobile phones, quietly but devastatingly tearing families apart. And that's why I speak today on the government's clauses 83 to 85 and Schedule 13. Remote gaming, including online slots and casino games, is the most addictive and fastest growing part of the gambling industry. These products are deliberately engineered to keep people playing, spending and losing long after the fun has gone and the harm has begun. In Wolverhampton North East, through my constituents' casework, I see the real-world consequences of parents trapped in spiralling debt, children going without the basics, and relationships breaking under unbearable strain. Now, this bill addresses that harm head-on. From the 1st of April this year, 2026, the rate of remote gaming duty will rise from 21% to 40%, targeting the most harmful and addictive parts of the market. For remote betting, a new rate of 25% will be introduced from 1st of April 2027, while bets on UK horse racing are protected and remain at current rates. Now, this reflects the lower harm of these products and recognises the contribution of operators to the statutory horse race betting levy. These targeted increases are not just about raising revenue, they are about disincentivising harmful practices and holding companies to account. Now, just as important is what this bill does not tax. And for my bingo-loving constituents, by abolishing bingo duty from the 1st of April 2026, this government is recognising that not all gambling is the same. Bingo halls like that in Wensfield are community spaces, places of friendship and connections, especially for some of our older residents. So supporting lower risk activities while cracking down on the most harmful ones is exactly the balanced approach that our communities expect. These changes will raise over £1 billion a year to support the public finances, including Labour's mission to lift 500,000 children out of poverty, and that impacts more than 4,200 children in my constituency of Wolverhampton North East. This is protecting families from harm, supporting communities and making sure that those who profit from misery finally pay their fair share. Minister.
Thank you, Madam Chair, and I'm grateful to honourable members for their contributions to today's debate, particularly to my honourable friends, the members for Wolverhampton North East, the members for Morecambe and Lunesdale, and my honourable friend, the member for Halazowen as well, and for their heartfelt speeches in favour of these measures. And I note to the comments of the Right Honourable Member for Gosport, which I can assure her I did listen to in full, and indeed my honourable friend sat just here, the member for Stoke-on-Trent Central, both of whom have, of course, tremendous expertise, I accept, in this area. As I set out, Madam Chair, we do believe the measures in clauses 83 to 85 deliver fair reforms to our system of gambling, because they reflect the reality of how gambling has changed in our country, the harms that now exist and the need for the tax system to keep pace as these changes continue. The government's objective is to strike a balance by raising revenue fairly while avoiding further pressures on land-based operators. New clauses 21 and 25 ask the Chancellor to review impacts and make a statement on the effects of the increase in gambling duties. And both new
I thank the Minister for giving way. She will know that Northern Ireland has some of the highest rates of gambling, with 3% of adults classified as problem gamblers and 5% at moderate risk. She will also know, and I welcome her efforts in this regard and the money that this will raise. Would you give a commitment to this House that she will enter into conversations with the Communities Minister in Northern Ireland about Northern Ireland's fair share of this levy to ensure that organisations helping those with gambling addictions are able to avail of this funding to help people in that situation? I spoke recently to a constituent and he started gambling at age 6 and it really struck a chord. Those people need help and I would just ask her to do that.
Minister.
Madam Chair, the Honourable Member raises an important point, and I'd like to check, and before I commit to her to take that forward, what discussions have already taken place, which I hope she will accept is necessary from my point of view. Both of the new clauses that are being proposed focus on the impacts of the changes to gambling duty and ask for a commitment to update Parliament within 6 months of the bill being passed. Can I first say that this government did not announce and is not proposing to make any changes to the treatment of free plays or free bets through this bill. And furthermore, the bill does not make any changes to the duty charged on bets placed on horse racing and indeed in high street betting shops. Second, Madam Chair, in relation to the illegal market, which has been raised a number of times, the Gambling Commission is already tackling this risk and is protecting consumers, but we do recognise that modern technology makes it easier for illegal websites to target consumers. So to strengthen enforcement and protect consumers from dangerous illegal sites, we are providing, as has been referred to, this additional £26 million over the next 3 years to the Gambling Commission. And my honourable friend, the member for Stoke-on-Trent Central, I hope I can assure him that the £100 million a year in form of the statutory levy is ring-fenced to address prevention and treatment and research in this area. Madam Chair, the government has published a tax information and impact note for this measure at budget, and as set out in that note, consideration will be given to monitoring and evaluating the expected exchequer impacts of the policy after at least 2 years of monitoring data has been analysed and collected. And more broadly, the government continually monitors the operation of all taxes and keeps them under review to ensure that they deliver on their intended outcomes and indeed are fit for purpose. So for these reasons, the proposed statement and the impact assessment are not necessary. So, Madam Chair, the measures in clauses 83 to 85 deliver, as I said, fair reforms to our system of gambling taxation. They do reflect how gambling has changed in our country, the harms that now exist and the need for the tax system to keep pace as these changes continue. Now, the Shadow Exchequer Secretary raised levels of employment. He'll know that right across the piece, the OBR expects that employment levels will rise in every year of the forecast. Costings were also raised, Madam Chair, as part of this debate, including by my honourable friend, the member for Stoke-on-Trent Central. The OBR has taken account of behavioural impacts within its costing, and of course those costings are certified and scrutinised in the usual way. Now, the Liberal Democrats spokesperson asked about engagement with industry, and I can confirm to her that the government, as I hope she would expect, we've engaged with a number of stakeholders, including from the gambling industry, as part of the consultation process. My honourable friend, the member for Stoke-on-Trent Central, also raised Gibraltar, and of course we recognise that Gibraltar has a gambling industry that very much faces the UK. I can assure him that there has been engagement, not by me, but by some of my colleagues in the Treasury with Gibraltar to that end. Madam Chair, I therefore urge the House to reject new clauses 21 and 25. And, yes.
I'm grateful, Madam Chair, grateful to the Minister for giving way. I'm grateful to the Minister for confirming that she had consulted and her ministers had engagement with the industry. What I was specifically wondering was whether in the course of that consultation with the industry there was discussion about using a different measure and choosing a different tax base for the calculation of this particular tax, because it does seem to me as if the tax base could have been bigger if they'd used the measure that was already in the Finance Act rather than this new measure, which seems to shrink the tax base. And I wondered whether there was a particular reason that the Treasury used for using a different measure for calculating this remote gaming duty.
Minister Rigby.
Madam Chair, it wasn't me that had those engagements, but as I said, I confirmed to her that we're not proposing to make any changes to the treatment of free plays and free bets through this bill, which I hope reassures her in that regard. Madam Chair, I was just about to urge the House to reject new clauses 21 and 25 and to move that clauses 83, 84, 85 and Schedule 13 stand part of this bill.
The question is that Clause 83 stand part of the bill. As many that opinion say aye. Aye. Contrary no. The ayes have it. The ayes have it. With the leave of the House, I shall put together the questions that Clauses 84 and 85 stand part of the bill and that Schedule 13 be the 13th schedule to the bill. The question is that Clauses 84 and 85 stand part of the bill and that Schedule 13 be the 13th schedule to the bill. As many that opinion say aye. Aye. On the contrary, no. The ayes have it. The ayes have it. New Clause 25 has been selected for a separate decision. I call James Wilde to move new Clause 25 formally.
Move formally. Yeah.
Statements on increasing remote gambling duty and introducing a new rate of general betting duty.
The question is that new Clause 25 be read a second time. As many that opinion say aye. Aye. On the contrary, no. No! Mr Desmond's fine. If you're seated, I can continue. The question is as on the order paper. As many that opinion say aye. Aye. On the contrary, no. No. Tell us for the ayes are Lincoln Job and Alicia Kearns, and tell us for the noes are Stephen Morgan and Tawa Aratami. Order, order.
The ayes to the right, 187. The noes to the left, 351.
The ayes to the right, 187. The noes to the left, 351. So the noes have it, the noes have it. Unlock. We now come to Group 3, to the group on rates of alcohol duty. We will begin with Clause 86 stand part, with which it will be convenient to consider the new clauses on the selection paper. The question is that Clause 86 stand part of the bill. I call the Minister.
Thank you, Madam Chair, and I'm pleased to open this session on Clause 86, the sixth and final session of this Committee of the Whole House on the Finance Bill. And Clause 86, of course, concerns alcohol duty. Madam Chair, the approach of this government to alcohol duty is one of proportionality, and indeed across the piece we're taking a fair and coherent approach to alcohol taxation as a whole. The measures in this bill take account of the important contribution of alcohol producers, pubs and the wider hospitality sector, the government's commitments to back British businesses and the need to maintain the health of the public finances as well. Clause 86 makes changes to alcohol duty rates from the 1st of February 2026, and specifically this clause changes the rates of alcohol duty for all alcoholic products in Schedule 7 of the Finance Act No. 2 2023 to reflect RPI. It also amends... I will.
She's considered carefully the fairness of the changes within this clause. Has she considered at all the compound effect of this and all the other taxes that are currently killing hospitality businesses?
Minister Rigby.
Madam Chair, I'm grateful for that intervention. We take obviously all impacts on hospitality sector and indeed the pub sector extremely seriously, and this government is proud to be backing British pubs right across the piece. Madam Chair, the changes that we're making help to ensure that as a country we live within our means, that we balance the books and indeed that we properly fund public services that we all rely on. And in the last debate of the Finance Bill, concerns were raised about the impact of alcohol duty on the hospitality sector and on British pubs. And we have made it clear, as indeed I just have, that we are steadfast supporters of British pubs and the wider hospitality sector, including because we introduced a new pro-growth licensing policy framework that was announced at budget. I will give way.
For giving way. She just said, I believe, that she was pro-pubs and the government was pro-pubs. Any pubs you speak to in my constituency are Maidenhead. The government is not pro-pubs is the message that they will tell them. The amount of profit left at the end of a pint for a pub is minuscule. It's just so far from reality that this government is pro-pubs. How does the Minister respond to all of these pubs across the country that are crying out for change?
Madam Chair, I was talking about our new pro-growth licensing policy framework that was announced at budget. And if the honourable member is referring to business rates specifically, as indeed I think he might be, we've made it clear that we're continuing to talk to the sector on any support beyond the existing £4.3 billion support package that the Chancellor announced at the budget too. Now, continuing to freeze alcohol duty, I will.
I thank the Minister for giving way, and I thank her for stating about an imminent decision on business rates. And it's not just about business rates. The Victorian Inn in Mumbles in my constituency actually says they hadn't banned me as a Labour MP, and they haven't banned any Labour MP, but they would like to extend the invitation to the front bench to visit Mumbles and to come to the pub and have that conversation, because it's a positive conversation about how the government is listening and moving forward.
Madam Chair, I'm grateful to my honourable friend for that invitation. It's one indeed that I will be taking her up. I would love to join her in that public house in her constituency. Importantly, Madam Chair, continuing to freeze, I'm going to make a little bit of progress. Continuing to freeze alcohol duty would primarily support cheaper alcohol in the off-trade, for instance, alcohol sold in shops and supermarkets, and have only a small indirect impact on the hospitality sector. This is because alcohol duty is, as honourable members will know, paid by producers, not by pubs, and 73% of alcohol consumed in the UK is purchased from shops rather than in pubs, restaurants and bars. I'm going to continue to make a little bit of progress. The government's decision to uprate alcohol duty in line with inflation is therefore not only a prudent decision for the public finances, but balances the important considerations, the contribution of alcohol producers, pubs and the wider hospitality sector with the need to support public services such as the NHS. So as honourable members will know, I'll give way to the honourable member.
Thank you, Minister, for giving way, and I appreciate that very much. Minister, in my constituency, what I've noticed is that there are more people who are taking non-alcoholic beer. There's also a reduction in some people in the numbers who actually take alcohol and drink as well. So does the Minister, and that means that sometimes pubs are under special pressure, they can still go and socialise, they can still go and have a meal, they can have their non-alcoholic drink at the go, but does the Minister have any possibilities within the legislation and the finance bill going through the night to promote that particular issue, because I believe it's a growing market that we should be looking at?
Minister Rigby.
Madam Chair, I'm grateful to the honourable member for his intervention, as indeed I always am to him for his interventions. And actually, I was just about to go on to talk about the strength-based duty system that exists. It was introduced on the 1st of August 2023 by the last government, and it followed the alcohol duty review. And of course, the new alcohol duty system that we have now taxes all alcoholic products according to their strength. So duty increases with alcohol content, and that represents a progressive shift. The reforms introduced two new reliefs, a draft relief to reduce the duty burden on draft products sold on trade venues, and a small producer relief that replaced the previous small brewers relief and aims to support SMEs and new entrants.
I thank the Minister for giving way. She rightly refers to the draft beer and cider relief. She said earlier that her concern about freezing alcohol duties was that most of the benefit would be going to supermarkets and others that sell beer cheaply. Surely she recognises that what the Chancellor should have done is reduced the draft rate, as happened last year, where the full benefit would have gone to licensed premises, because they're the only venues that can sell the draft drinks that are covered by that rate.
Mr Rigby.
Madam Chair, I'm grateful to the honourable member for his intervention. My point was that if you take the decision that you're not going to uprate alcohol duty, the benefit of that is felt mostly in the off-trade, which I'm sure is a point that he appears to understand. I was talking, Madam Chair, about the small producer relief that replaced the previous small brewers relief and aims to support SMEs and new entrants by permitting smaller producers to pay reduced duty rates. So this clause today that we're debating maintains the generosity of small producers' relief compared to main duty rates. So the changes, Madam Chair, in this clause maintain the real terms value of alcohol duty, balance the need to support alcohol producers, pubs and the wider hospitality sector with the need to support the public finances. And further to this, as I said, Madam Chair, the changes also support smaller producers by maintaining the generosity of small producers' relief. And I therefore move that this clause stand as part of the bill.
I call the Shadow Minister, James Wild.
Hear, hear.
Thank you very much, Madam Chair. And it feels like we're getting warmed up for scrutinising the 536 pages of this bill upstairs in committee shortly. And it's good to see the popularity of the topics we are debating has increased as we move on to alcohol duties and Clause 86, which increases it in line with RPI from the 1st of February. And certainly on behalf of His Majesty's opposition, we're proud to confirm that we are big supporters of the beer, wine, spirits and hospitality businesses, and as such we oppose these tax rises. This £26 billion tax-raising budget piles pressure on households and businesses already struggling due to the decisions of the Chancellor. Prices are high, growth is sluggish, and now the Chancellor has chosen to impose another duty hike. And our new Clause 26 therefore requires the Chancellor to publish a statement on the impact of increasing alcohol duty on the hospitality sector, on pubs, on wine, spirits and beer producers, on jobs and on the public finances. These are sectors that are already being hammered by this government's economic choices, and a government that says the cost of living is its priority is raising alcohol duty, putting more cost onto people and to businesses that keep our rural communities and our high streets alive. Surely.
For giving way. And I want to start by wishing everybody who's taken part in Dry January good luck. I'm not one of them, I have to admit. But I think it's fantastic that the opposition front bench is talking about what the impact of these changes might be. But I was surprised to hear in his list that didn't include alcohol harm. Many charities and campaign groups are quite pleased that the government's trying to move people away from drinking at home to drinking in the hospitality sector. Surely he must accept this is a good thing, and perhaps it should be evaluated in terms of benefits.
James Wild.
Indeed, and one of the things we did when we brought in the new GT system was to focus on the strength of alcohol in terms of the tax. But we want to encourage more people into the hospitality sector. The government seems to have a policy of driving people away from going into pubs and not just Labour MPs. And in government, that gives me the opportunity to say that we recognise the importance of these sectors to jobs, to our communities and to growth. And that simplified duty system, including the two new reliefs, draft duty and small producer relief, were warmly welcomed. And my honourable friend made the point about the government is choosing not to do the similar things that we did on draft relief. And at the autumn statement in 2023, we actually froze alcohol duty rates, a freeze we extended again in the spring budget of 2024. And I'm proud to support that record, where we had a government working with the sector, not against it. And it gives me no pleasure to say that this government has chosen a very different path. And the hospital... Happily.
Both my honourable friend and myself represent very large rural constituencies. I just wonder whether we could think a bit creatively across the two sides of the House. How are we going to save the great British rural pub in terms of giving special credence to people who sell draft beer rather than sell in supermarkets, national insurance, all this sort of thing. Otherwise, a great institution, which most people have to drive to, is really in danger of extinction. It's part of our history, isn't it?
It absolutely is, and I'd be happy to come to my honourable friend's constituency to discuss this over a pint in one of those small rural pubs, which are literally the hub in our villages and hamlets. And once they are gone, it's very difficult to replace them. And the government clearly has the hospitality sector in its crosshairs, and Clause 86 is just the latest salvo. And this is no small corner of the economy. 3.5 million people are employed directly in the sector, which invests £7 billion a year. Yet this industry has been punished by the Chancellor's decisions and this clause. UK Hospitality's Tax Out campaign has highlighted the nearly 90,000 jobs that have been lost in this sector. And with unemployment now above 5%, it is young people in particular who are paying the price. And that is the consequence of the Chancellor's damaging tax rises supported by honourable members opposite. Higher alcohol duties, the jobs tax, energy bills and soaring business rates are layering cost upon cost. Little wonder UK Hospitality has called the government's approach a hammer blow. Yes.
Thank you to the Shadow Minister. Does he agree with me that as a result of this policy, lots of local pubs, including lots more in the hospitality industry, will go out of business as a result?
That's very clearly the risk, and the British Beer and Pub Association have said the proposed increases will be damaging to the sector, and we may well see more closures as a result. So new Clause 26 would shine a light on the real impact that these decisions would have on rural pubs, on jobs and businesses. And I hope the Minister won't simply dismiss this amendment by referring to the tax and information impact notice she did on an earlier group. That is a prediction of what's going to happen. It's not a review of what the actuality is. So I hope that she will actually consider the amendment. Happy.
This amendment's even more important, given the fact that the Government and the Chancellor and the Prime Minister themselves understand the impact it's going to have on pubs, because they said they're going to bring forward measures for helping and supporting pubs. Yet we haven't seen those measures because they're not in this bill. So therefore we need to have some form of accountability to be able to understand the impact, not only of the measures that are in front of us that we can vote on, but the proposed ones that are coming to support the measures that the Government is already looking to put in this bill that's going to have the impact. Does that make sense, and does he agree?
I think it does make sense, and I certainly agree with him. I think the government is having to try and put in place solutions to deal with problems which they themselves have created. And if Labour MPs were welcome in pubs across the country, they would hear quite how difficult, I'm sure the honourable member is. Some aren't, so let's be clear. And they don't. If you go into a pub, I don't think you'll find many publicans who think this government is pro-pub. We've got a Chancellor who said that she didn't understand the impact that her budget and the revaluation and removing the discount on business rates would have. That is staggering and, frankly, once again shows she doesn't understand business, and she wasn't listening when the sector and many others were warning that's precisely the impact of her policy would have. And now she's reportedly about to do a U-turn on a business rates raid. Well, she hasn't come to the House yet to inform us or to inform the sector. But what's being briefed is likely to be wholly inadequate. We hear ministers on the radio this morning say it's going to be limited just to pubs. But the impact is not just on pubs, it's across the whole hospitality sector, leisure businesses and retail. They are all facing huge increases in their business rates.
Shadow Minister, for giving way. Would he agree with me that it's not just enough, if this Labour climb down is happening, to be a smaller increase than was planned, but it needs to be no increase in business rates?
Well, the honourable gentleman tempts me to my next paragraph, which is that instead of tinkering, the Chancellor should adopt our Conservative Party policies and abolish business rates for pubs, hospitality businesses, retail and leisure businesses, and also slash the average pub's energy bill by £1,000. That's real help, and she can have those ideas for free. The duty increases will also impact the UK's world-class wine and spirits producers, which together generate £76 billion in economic activity. And across our wine sector, there are now more than 1,000 vineyards, including some excellent ones in northwest Norfolk, which I recommend. And yet, despite this success, we're seeing the government putting yet more costs onto the sector. 60% of the price of a bottle of wine already goes in tax. And instead of listening to calls from the sector to freeze duty, the Chancellor has decided to increase it and has failed to fix the small producer relief so it works for winemakers and distillers. And the picture is no rosier in the spirits section, and the Scotch Whisky Association has said that the increase piles additional pressure on a sector already suffering job losses, stalled investment and business closures. It estimates the previous rise in duty had reduced spirits revenue amounting to about £150 million loss to the Treasury. And UK Spirits Alliance has called the budget a sad day for the nation's distillers, pubs and the wider hospitality sector. WineGB joins their ranks in pointing out that higher prices will likely lead to lower sales and reducing the Treasury revenue. So the sector couldn't be clearer. The only people still pretending this is good economics are those on the government benches. And when the government should be backing businesses, it's choosing to add to their costs, and increased taxes have consequences, depressing demand and revenue. In October, YouGov found that 1 in 4 regular drinkers was likely to reduce their alcohol spend this year due to price increases. And the Wine and Spirits Trade Association has called for the OBR's forecasting assumptions to be reviewed. And the government is putting itself and the UK on the wrong side of the Laffer curve here, which the honourable gentleman should read up more and he'll be persuaded. Ministers should take fresh advice on the impact of these changes. So, Madam Chair, to bring my comments to a conclusion, the UK's brewers, producers and hospitality businesses are resilient, and they need to be, frankly, in the face of this government's onslaught. They're at the heart of our communities, creating jobs, driving local growth and giving many young people their first opportunity in work. Now is time to support the sector, not to tax it more. That's why we'll be voting against these measures this evening.
Lawrence Turner.
Thank you very much. much, Madam Deputy Speaker, and I draw attention to my chairship of the GMB Parliamentary Group, a union that represents workers in the distillery and retail trades. Madam Deputy Speaker, I will keep my comments limited to the uprating of excise duty, but I would like to welcome this budget more generally, which represents the right choice in investment and renewal over austerity and decline. Now, Clause 86 of the Finance Bill represents a simple uprating of alcohol duty in accordance with the Retail Prices Index, and in this sense, the clause represents continuity with a policy of successive governments over many years, going back to the early 1970s, and of course the principle of excise duty predates that by many years more. And I think it is telling that none of the amendments before us today actively seek to reverse the increase, noting the Shadow Minister's comments. The effects of the escalator are also to an extent softened by the reduction for draft products, which, combined with pre-existing changes to the tax system, amount to a somewhat more favourable regime for drinks most sold in pubs. And this direction of policy is welcome, given everything we know about the attendant health and social harm that can be the result of solo drinking. It is worth noting that the increase is in line with international best practice. It's timely that just today the World Health Organization published a new report titled Global Report on the Use of Alcohol Taxes, and it said that specific excise taxes need to be regularly adjusted for inflation or their real value risks erosion over time. The WHO report also establishes that the UK's effective tax take is firmly in line with many other European countries, including Belgium and much of Central and Eastern Europe, and of course it is significantly lower than in Scandinavia. So uprating the duty strikes the right balance between the different objectives of encouraging social activity, supporting the hospitality and manufacturing industries, and not encouraging excessive consumption. It is true that there have been changes in alcohol consumption rates amongst the general public, and that has been a change particularly marked since COVID. As the 2024 Living Costs and Food Survey found, there has been a notable fall in real terms alcohol consumption, both in and out of the home, and that is why specific measures are needed to support the pub trade. Now, if I may, I would like to say a few words about the revaluation 2026 process. I've raised questions about this before, and the Minister has indicated that, as the phrase goes, discussions are ongoing. So in the interests of time, I will not repeat them today. But I would like to note two things. First, the Valuation Office Agency has been genuinely independent since the days of the incremental value duty. And second, Valuation 2026 has been coming for a long time. It was the last government that changed the law to make for 3-year valuation exercises. And as successive annual reports of the VOA make clear, the risk of valuations which do not meet the sufficient level of quality in individual sectors was a foreseen risk, and a delivery plan was developed before the 2024 general election to mitigate those risks as the VOA saw it. So presumably the government at the day did not have concerns over the VOA's approach, because if they did, then they would have raised them on the record. I would like to make two further brief points. The first is that in terms of the treatment of different types of alcohol sales by the tax system, I do think something does need to be done about the sale of particular high-strength drinks on our high streets in proximity to betting shops. If you were to go, Madam Deputy Speaker, to Norfolk High Street, you would see a succession of small betting shops immediately next to off-licences where very low-cost but very high-strength beers and ciders are sold. There is a revolving door between these premises, and it is a major contribution to some of the antisocial problems that we have on our high streets. And I hope that future exercises will look at different treatments, whether it's powers to local authorities or changes in the tax system, to try to remedy this problem. Second, it has been... I will give way.
Grateful to the honourable member for giving way on that very important point. I recognise, or rather I remember precisely the dynamic that he sets out in his local high street. And we used to have that in Scotland too, until we introduced minimum unit pricing, which took away the very large volume, high-strength alcohol products off the shelf in Scotland, or certainly put them way up in price. You can check with the honourable member for Edinburgh South West, who I'm sure will endorse that SNP policy.
on the same select committee as the Honourable Member for Edinburgh South West, and I know better than to speak for him. I have a degree of personal sympathy with the case that the Honourable Member sets out. I also think there's something to be said for giving more powers to our councils, because those decisions about areas which are particularly at risk of complex interactions between homelessness, lack of mental health provision and the sales of these at times dangerous products are best made locally in addition to national policy setting. And the further comment, and the final one that I wanted to come on to, is that there have been calls outside this place for uprating to be moved to a different inflation index, principally the CPI or the CPIH. I think this is an important matter, and it's one that's not been raised in this debate, so I wanted to touch on it in a short time. It should be said, I think, that although the CPI and the CPIH are both of use as macroeconomic indicators, the RPI remains the only measure which is in general circulation and is updated regularly, that actively seeks to measure the cost of living as it is experienced by working people. Now, criticisms can be made of the RPI, but I do think it is important to place on record that it was in the early 2010s that regular changes to the methodology for the RPI were discontinued, and that is behind the formula gap, which has led to the widening of the headline rates between the RPI and the CPI. So I'm not convinced that moving to a different rate at this time is appropriate, given some of the limitations which on another occasion we could go on to in the CPI and its twin, the CPIH rate. The ONS has been developing the alternative household cost indices measure, which I think is particularly useful because it does capture the different rates of inflation that are experienced by households of different income levels. I hope that in future we can look at the HCIs as an alternative means of uprating the various charges, levies and escalators that government does apply. We are not in that place yet, and it's important that the ONS does make progress in this area. But on the whole, I welcome the Minister's statement. Compared to some of the other debates we have had in this Parliament, particularly in relation to the Product Regulation and Metrology Bill, when it was suggested that there was some secretive and sinister plots to change sales of the pint to some metric measure, this has been, by contrast, a sober debate, and I look forward to voting for the Finance Bill tonight.
Liberal Democrat spokesperson Daisy Cooper.
Thank you, Madam Chair. Clause 86 increases the rate of alcohol duty in line with RPI inflation, and on paper this measure might just look like a normal, simple uprating policy, but it must be seen, it has to be seen, for what it really is. In the broader context, it is just yet another tax on struggling hospitality businesses and financially stretched customers. Hospitality is being hammered over and over and over again with sky-high rents and soaring energy bills, the government's unfair jobs tax, and now this business rates bombshell buried in the fine print of the budget. And it matters. Hospitality really matters. It is the only element of pre-pandemic spending that has not recovered. It is a sector that employs huge numbers of young people and part-time workers, often giving people their very first job and their way into longer-term employment. And it's one of the sectors that actually makes life worth living. We all remember the place we went where we fell in love or had our first date. I remember the music venue I went to, where I found my favourite band. I remember the pub where I sat with my girlfriends and one told me that she was not going to survive her stage 4 cancer. And I remember the spa day we had when she did. Hospitality is part of who we are as human beings. It is unique in what it contributes to our economy, and we must do everything to support it. I will.
I thank my honourable friend for giving way. If this debate was before Christmas, I would have had to declare an interest. But my father has now sold his majority share in our local pub in our hometown. And I think that actually goes to the core of the debate that we're having today. Publicans are leaving the sector. But you talk about the importance of hospitality, but also that importance, would you agree with me, of building that sense of community. My father's pub used to host bingo nights on a Thursday and a Sunday afternoon, and you would see people attend the pub there who would never attend during the week. So that sense of community that they build is crucial and under threat from this Labour government.
My honourable friend for that. He's absolutely right. Pubs are irreplaceable. And when a pub goes, a community falls apart. Pubs are vital as part of the social fabric and the glue that holds our communities together. And we absolutely must protect them. And this is why we have tabled new clause at 9, because we want the government to look at and report on the cumulative impact on the hospitality sector of these alcohol duty measures alongside all of the other wider fiscal changes, including the higher national insurance contributions and the business rates changes as well. This really, really matters. Now, I will.
I'm very grateful to the Honourable Lady for giving way. Back in November, the Chancellor promised to support the Great British Pub by introducing permanently lower tax rates than over 750,000 retail and hospitality properties. Given that in my constituency, pubs like the Half Moon are going to experience a 157% rise in business rates, the Inn at West End 87% and the Frog in Deepcut 128%. Does the Honourable Lady agree with me that this feels less like support and more like last orders?
Exactly.
Absolutely. I agree 100% with my honourable friend. And one of the points I've made repeatedly to other ministers is that businesses heard that promise. Businesses heard the promise that there would be permanently lower business rates, and they made decisions based on the fact that they heard the word lower. The government gave itself powers to introduce a lower multiplier for retail, hospitality and leisure of 20p less. And if the government had used those powers, it was understood by the hospitality industry that would effectively cancel out the RHL relief that was going to be lost. So businesses made investment decisions. They made hiring decisions. They made all sorts of decisions based on what they thought was going to happen. But the government hasn't used those powers which it gave itself, instead only using minus 5 pence rather than the full maximum minus 20 pence. And as a result, I will give way.
Thank the Honourable Lady for giving way. I recently met with Richard, a publican in my constituency of Horsham, and he told me that the trade has never been so tough. And I'll quote you exactly what he said. The truth of the matter is, for the first time I'm thinking I shouldn't have bothered taking the risk of going into business. I should have stayed with the big brewer, taken my salary, relied on a pension. He's right, isn't he?
I hope so much that he's not, but I understand why he is saying that, and I hear it from many hospitality owners and pub landlords in my patch as well. And because we Liberal Democrats care so deeply for hospitality and recognise the vital role that it plays in every community up and down the land, that is why we were campaigning ahead of the budget for an emergency VAT cut for hospitality, accommodations and attractions until April 2027, a measure which would have brought growth into every corner of our country, would have saved jobs and our high streets and given a real boost to consumer confidence. And it's why, since the budget, we have been fighting tirelessly against the government's devastating business rates hikes and pressing ministers to implement the full 20p discount for which they legislated last year.
Would you give way?
I will.
I'm great to giving way. She rightly points to the cumulative effect, but I'm just interested in looking at her amendment, new clause 9. It doesn't mention the Employment Rights Bill, and it doesn't mention the impact of the national living wage increase. Is that by design that the Liberal Democrats haven't put that in because they don't agree they have an impact on hospitality, or was it an oversight and it's another cumulative effect that needs to be considered when looking and holding the government to account?
I'm grateful for that question. If you read it closely, it does say alongside wider fiscal changes. Government could, of course, choose to widen that to other legislative changes as well if they chose to do so. But I hope on that basis that the honourable member and his colleagues will be supporting this amendment when we push it to a vote later today. Madam Chair, I will.
Important point of clarity on the living wage. Which of our constituents on low pay does she think don't deserve that uplift in living wage? Is she saying they don't deserve it?
During the course of the Employment Rights Bill, we Liberal Democrats said repeatedly on the record in both houses that we supported having that higher minimum wage. The problem that we're hearing from business, particularly small businesses, is that they're getting lots of changes from the government all at once. It's business rates changes, it's higher contributions, it's the wages, it's the new regulation, and now it's alcohol duty as well. It's the cumulative impact of all of the employment changes and the fiscal changes, which means that business owners and pub landlords just cannot cope. So it's the cumulative impact. If these were staged, we've made it very clear which measures we support and which ones we don't, but the cumulative impact is something that is felt by small businesses, and that's why during the course of the Employment Rights Bill we tabled a number of amendments asking the government to report on the impact on small businesses in particular. But I hope that's clarified the matter for the honourable member. On that point.
So a wide range of concerns have been developed, and I get that the point that's been made is that these are costing the hospitality sector money, and I absolutely get that. But all that's been promised is a review. What I don't hear is what the Lib Dems would actually do to resolve this, and how much it would cost. Apart from this broad assertion that you're going to cut VAT, that VAT's going to be cut in some undefined way, and what is this going to cost, and where's the money coming from?
Madam Chair, I have explained all of these measures in this chamber before, but I'm happy to spell them out again, including the remarks I made just a few minutes ago. The very first thing that we have called for was for the government to use the powers that it gave itself in the budget last year. I would love to know the costings for that measure, and I've tabled written parliamentary questions to ask the government if they would give me those numbers. And if the government won't answer those written questions, how on earth are we as opposition parties supposed to then come up with modern proposals? You know, we have tabled a number of written questions time and time again, and we have not received answers to that measure. On the second point, on VAT, we have costed it. We said it would cost £7 billion over 17 months, and we would fund it with a windfall tax on the big banks, which is a proposal backed by the IPPR and independent economists. So we have answered all of these points. We've explained where the money would come from. They're fully costed, they're fully funded, and we made those points in this House on several occasions. I'm sure if he has a look at Hansard, he will see that. But my point is, if we're going to put questions to the government, asking them for data so we can make informed policy suggestions, I would hope very much that the government would now start to answer them. And related to that matter, Madam Chair, it has been reported in various newspapers, on the BBC and other places, that the Chancellor and the ministers didn't, and those sources have quoted the Chancellor and ministers as saying they didn't understand the impact that revaluations would have on business rates bills, especially for pubs. Now, Madam Chair, I find that impossible to believe and understand how that can be the case. Now, we know for a fact that at the very least, the VOA, the Valuation Office, gave the aggregate data to the Treasury. And we know that because on page 81 of the Red Book, it says it right here in black and white, slightly red, but black and red. It says that the VOA gave that data to the Treasury. I tabled a number of written questions to the government to ask them whether they'd received that information broken down by sector. And I didn't receive any answers. I wrote a letter to the Leader of the House. I did a point of order. And again, that information was not forthcoming. And then we had a bombshell revelation today. The VOA was giving evidence to the Treasury Select Committee. And they confirmed, upon questioning, that the VOA had given data drops on the sectoral impact starting a year ago. They also confirmed to the Treasury Select Committee today that 5,100 pubs had seen their rateable values at least double. This is what the VOA told the Select Committee today. So based on that information, it seems as if the VOA did provide that information to the Treasury, then the Treasury should have had that information. And it is not clear to me why I didn't receive data-rich answers to my written questions asking for that breakdown by sector. And it is also not clear to me how the Chancellor and ministers can say that they didn't know or didn't understand the impact that the revaluation would have on bills if indeed they had had that data over the course of the last year. So I would urge ministers, when they come to this House, as they are indicating they will, to provide some kind of a U-turn, but we don't know what that looks like, to bring some clarity to all of those questions. In the meantime, Madam Chair, I hope the Government does support new Clause 9, because we do need to see the cumulative impact, not just of alcohol duty changes, but the impact of that alongside national insurance and business rates. I will.
She was giving a very good speech, and I hope, as the Liberal Democrat spokesman, she'll say just a tiny bit more about rural pubs. I think a lot of urban members don't understand the context here. To put it in context, where I live locally here in Westminster, it takes me 1 minute to walk to my local. 1 minute. Where I live in Lincolnshire, in the Lincolnshire Wolds, it takes me 1 hour to walk to the pub. 1 hour. Everybody who accesses these pubs in rural England has to go there by car. We don't ride horses anymore. It's too dangerous to walk on the road or take a bicycle. So the government has to understand that the rural pub is in real danger from these alcohol limits and other measures.
I'm incredibly grateful to the right honourable member for making that point. I am the MP for St Albans, which is a small city, but I'm also a Suffolk girl born and bred, and so I know how valuable pubs are in a rural area for providing all sorts of services, for looking after older and single people. They are a fantastic community hub. They provide employment for young people. I had one of my first jobs, aside from apple picking, was working in a pub. So I do understand the absolutely vital importance of pubs in every single village, town, parish and hamlet, right up and down the United Kingdom. I'm grateful to him for making that point. But, Madam Chair, in closing, I hope that when the Government responds this evening, they provide some answers to some of these questions. What did the ministers know and when? If the VOA sent that sector information on valuations, when was it sent? When did they send the information on pubs specifically? If the VOA did tell ministers that the rateable values had at least doubled for more than 5,000 pubs, how is it possible that ministers didn't know? Why have we still not had a statement from the Government on what they are trying to do? Will their announcement extend to the rest of the hospitality industry or just to pubs? Will the Government now use the full powers that they gave themselves? And I can't cost it because I haven't been given the numbers despite repeated attempts to get it. And will the Government consider a VAT cut? And, Madam Chair, my final point, the only rumour that we've heard about what the Government may be considering is changes to licensing laws. And let me close on this point. If your pub is empty, you do not want to keep it open for longer, paying more money to keep the lights on, the radiators heated and the staff behind the bar. That is not an answer to this problem. Thank you.
Jacob Collier.
Madam Chair, and as the MP representing the home of British Brewing in Burton-upon-Trent, it will come as no surprise to you that I am speaking on this Clause 86 tonight and will focus my contribution on pubs and hospitality, because for me this is not just political, it is personal. As a Burtonian, I grew up with the smell of hops permeating the air, Burton's famous water flowing from the taps, and my very first job was in a pub. This industry is who we are, and pubs are woven into the very fabric of our country. They are the heart of our high streets and villages, and among the last shared spaces that we have. When we talk about growth, supporting well-being, employment, pubs and hospitality sit at the heart of that conversation. Yet this is an industry that has faced years of challenge, navigating the pandemic, absorbing high energy costs and managing rising prices, which has left many venues operating on very low margins, if any at all. That's why the decisions that we take under this clause matter so much. Madam Chair, we must look carefully at the overall effect of alcohol duty and how it interacts with consumer behaviour. There is a case to strengthen differential rates of duty between supermarkets and pubs, known as draft relief. Drinking in a pub is not the same as drinking at home. Pubs are supervised, regulated spaces. Landlords ensure responsible drinking, with pubs providing that social connection and supporting mental health in our communities. Pubs give character to our high streets and town centres, but yet the tax system makes it cheaper to buy alcohol in bulk from a supermarket than it does to go down the local pub. If we are serious about encouraging people back into our town centres, into these shared protected spaces, then alcohol duty must work in favour of pubs. I would encourage the Treasury front bench to look at the letter from those of us on the all-party parliamentary beer group calling for the multiplier to be increased to 20% from around 13% at the moment. And this is supported by CAMRA, SEBA and the British Institute of Innkeeping. This is not about encouraging more drinking, but encouraging better drinking in places that strengthen our local communities and our local economies. I recognise the permanently lower multiplier on business rates that the government have put in place for retail, hospitality and leisure businesses, but any wins in this space have been wiped out in many cases through the new rateable values published by the VOA. In my constituency, the rateable value of the Devonshire Arms, the Devi, my favourite pub, is set to increase by over 60%. Down the road at the Roebuck, it's 70%. And at this rate, I'm not going to have much of a pub crawl. We must stay true to that manifesto commitment that we made to level the playing field between online retailers and the high street. An on average 76% increase for pubs, but just 14% for online retailers means that we must think again on this. It's no good having transitional relief in place when a bill at the end of the 3 years is just simply unaffordable. Industry voices are clear that further support is needed in the short term while longer term changes and reforms are worked through. Operators such as Punch Pubs, which is headquartered in my constituency, have called for a higher business rates discount up to the maximum permitted to help offset these valuations and the cumulative tax burden that pubs face. UK Hospitality has similarly warned that even after reduced multipliers and transitional relief that the government has put in place, the average pub faces a significant increase in its business rates bill alongside cumulative other impacts that honourable members have talked about earlier in the debate. The government is right to listen to those of us on this side of the House who've been raising the voices of pubs, brewers, restaurants and small business owners. And I want to thank those publicans and those business owners, those representative bodies that have engaged positively with me, as it's only through that constructively working together that we can bring about change. Businesses that I speak to want to invest, they want to grow, but they need the space and the certainty to do so. I really welcome the recent hospitality investment that we've seen in my constituency from Lowe's on Carter Street, Nathan Dawes' expansion of Isabel's and Bespoke Inn's redevelopment of the Hart and now taking on Tutbury Castle. We need these businesses to be supported by government so that we can meet their ambition, create more well-paid jobs and revive our high streets and town centres. That means a fair approach to alcohol duty under Clause 86, a recognition of the difference between pubs and supermarkets, and targeted support on business rates while deeper changes are delivered. If we get this right, then the reward is clear: thriving pubs, stronger high streets, more resilient local economies, and communities that are not just better off, but happier and more connected. That's why pubs and hospitality must continue to be listened to, supported and championed in this House and by this Labour government, and I shall continue to do that.
Madam Deputy Speaker, and it's a genuine pleasure to follow on from the honourable gentleman who made some excellent points. But before I begin, if I may just disclose that although I don't have any interest in the register that are relevant to this debate, I have received hospitality below the threshold from the UK Hospitality, British Beer and Pub Association, CAMRA and the British Institute of Innkeeping, and there may be others. But people up and down this country may be justified in asking themselves what this government has against pubs, because although so many of the things that are causing so many pubs to struggle and to actually question whether they can survive beyond the very short term, things like those enormous increases in business rates, obviously the increases in employers' national insurance that particularly hit those who employ part-time workers, things like the ever-growing burden of regulation summed up by the Employment Rights Act and the additional burden that will put on many pubs and hospitality venues. But I think this clause in the finance bill really sums it up, because the government did have a choice. It could have done what, in fairness to the Chancellor, she actually did last year in building on a success of the previous Conservative government. She could have reduced that draft rate of duty so that beer and cider sold on draft in pubs was paying a lower rate, at the same time as perhaps extending that differential with supermarkets and off-sales that might be sold at or below cost price. But the Chancellor chose not to do that. She chose to increase the duty on top of all of those extra burdens that are threatening the survival of our community pubs, of bars around the country, other hospitality venues. By increasing by RPI, rather than even the lower rate of CPI, this Chancellor is threatening to return to the bad old days of the previous Labour government's hated beer duty escalator, where that duty rate continues year after year. Now, the honourable gentleman from Birmingham Northfield, I think, suggested that this was somehow in keeping with a trend or the policy of successive governments. And nothing could be further from the truth, because in just 19 months, this government will have increased beer duty by more than it went up in the 12 years running up to the last general election. This is a massive increase in duty in a short period. Indeed, the price, the duty paid on a pint in a pub was actually lower in July 2024 than it had been 12 years earlier, because of the policy decisions made by Conservative chancellors. Of course, I'll give the way.
I thank my honourable friend for giving way, and I'm sure, like me, he has been to quite a few pubs in his constituency. And what many of my publicans are saying is that they have a choice because of the decisions that this government is making, which is to try and get more customers or lay off staff. But this is affecting pubs who are busy. This is affecting pubs who are at their capacity, and yet they are now really worried that they will be able to survive another year. I wonder if my honourable friend has had that experience from his local publicans.
My honourable friend is, of course, right, although it's not really a choice that many pubs are able to make, because the choice is taken for them. And it is the same as we saw when the previous Labour government's beer duty escalator was in force. We know that increases in alcohol duties have minimal impact on overall alcohol consumption. But what they do have an impact is the way that people drink and what they drink. Higher alcohol duties lead to a shift in people consuming alcohol in well-regulated licensed premises like a community pub, where they'll typically drink medium-strength beer and cider. That will go down, and more people will drink more stronger alcohol at home without that protective framework of a licensed pub. So this makes no sense on a social or health basis or on an economic and community basis. It is the wrong thing to do. Yet again, it is yet another burden that our overstretched pubs and hospitality venues simply cannot afford. It is the wrong thing to do, and that is why, as well as our own amendment, I'll certainly be supporting the amendment tabled by the Liberal Democrats, as well as opposing this clause. There is a better alternative. Of course, we need to sort out the genuinely lower business rate bills for hospitality venues, the thing that the Chancellor promised she was doing, the thing that the Business Secretary apparently thought that they were doing, despite the Treasury publishing all the data on the day of the budget that made it clear that, the median rateable value of pubs was going up by a full third, that more than offset the reduction in the business rate multiplier. The government certainly needs to address that, but it can make a start tonight by dropping these plans to increase alcohol duty, and in particular to increase alcohol duty on draft beer in our high street and community pubs.
Thank you very much, Madam Deputy Speaker. It's a pleasure to follow my county colleague from South Staffordshire, but also my other county colleague from Burton and New Toxeter. Staffordshire and Stoke-on-Trent is a county that's rich in the heritage of brewing, and Burton is a prime example of that, but also in Stoke-on-Trent, where we've got some wonderful small brewers such as Titanic, who sadly have shared with me the business rate increases that they face, and in some of their venues it's a 450% increase. It's a challenge they have to face, and it's something I hope that the government will seriously look at finding a realistic and workable solution to, because the value of pubs in our communities isn't just by the pints that they sell, but it's about the people that they look after. It's the old gent nursing a pint for a couple of hours and being looked after by the bar staff there that we lose, and we lose at a peril. I wish to maintain my comments to the specificity around the differential between cider rates and beer rates, because one of the things that the Treasury has done for many, many years, including under the Conservative government, is they've kept an unfair differential between the rate of duty applied to cider and the rate of duty applied to beer. Now, that came in during the coalition government, and I can only presume it had something to do with a number of Lib Dem seats in the South West. But the point still remains that if you are a small beer producer, small brewery in the UK, you will pay more in duty on the pints that you produce than a global cider manufacturer will, because of the differential points where the relief comes in. Will give way, yes.
I thank the honourable gentleman for giving way. We also have under this government that champagne in France is taxed 40% less than sparkling wine is in this country. So if we're levelling the playing field, do you believe that this government should also level the playing field for English sparkling wine to be able to compete with champagne?
I mean, on the danger of getting into the inevitable jokes about champagne socialism, I can understand the point that the honourable gentleman is making, but he's right, actually. There needs to be a fair play in this, because actually if you even out the taxation across the sector, then it does mean you can do targeted support in other areas where we know that there should be an unfair advantage for certain things. Like the honourable gentleman from South Staffordshire and Kings Winford says, actually making a greater use of the draft release for those that are selling alcohol in a pub is something we should be encouraging and supporting. But currently, Madam Deputy Speaker, as I was saying, 61% of cider producers produce less than 5 hectolitres of alcohol, meaning that they get a 100% reduction in the duty that they pay, which is why you could increase or level out the rate of alcohol duty on cider and beer producers without actually impacting the small cider producers in this country. It would only impact the global manufacturers who, frankly, are taking a profit and making, I would argue, a substandard product, or trying to hide a mass-produced product behind a local label, which often is the case. Currently, under the government's proposal, it will be £10.39 per litre for cider and £22.58 for beer. And that differential grows every year because it is uprated by an inflation percentage. Actually, over the last few years, the rate between the two in cash terms has just got bigger and bigger. And it is a disadvantage to those small brewers who are producing good quality beer that they are paying a rate of alcohol duty equivalent to the global cider manufacturers. SEBA have given me some numbers. They estimate that a levelling of that figure could generate £360 million per year. Now, that money could either go towards reducing the rate overall for all levels of duty, or actually what it could be done, it could be put into reducing the draft relief further, so that there is a clear and meaningful differential between those that are selling alcohol in a pub and those that are selling alcohol in a supermarket. And frankly, there are some brilliant pubs in my own constituency, the Greyhound in Harts Hill being the one that I frequent the most. And you go in there and it's a community venue, and if they have to pay greater levels of duty on alcohol as a result of this budget, I'm sure they will find a way of doing that. But if there was a way of encouraging more people to go to that pub because the rate of duty on that pint was lower and it was subsidised by those big cider producers selling to the supermarkets, and that to me seems like a fair thing to do. The other thing, Madam Chair, if I can indulge your for one moment, there is a non-tax thing that actually would cost the government nothing that they could do to support those small brewers across the country. There is currently sitting on the desk in the Department of Business and Trade the Market Access Review that would guarantee that small brewers could have access to pubs in their locality to guarantee guest ales. It's a mechanism that I believe they have in Scotland already that is working well, I understand, until someone tells me otherwise. If we could replicate that in England and Wales, it would mean those small independent brewers would have an opportunity to sell more beer in pubs where they would have a lower rate of duty applied to that product. It would help them with their business. It would give publicans an opportunity to increase the range of beers they sell that would then help attract more people into those pubs. And frankly, it would mean that we have more small independent brewers in this country selling more pints of beer, which supports them as employers and as good companies like Titanic in my own city.
John Lamont.
Madam Chairman, it's a privilege to speak in this debate. I want to speak both about the pub and hospitality sector in my constituency in the Scottish border, but more broadly about a very important industry in Scotland and is a key part, a lifeblood of the Scottish economy, and how these changes are going to impact that. Now, we're obviously debating the hike in alcohol duty, which the Treasury describes as mere uprating. But for Scotland, this technical change is going to have a real impact on our iconic industry, a hammer blow to the Scottish whisky industry, as well as the pub and hospitality sector. Now, the Treasury, hiking up these taxes to fill the black hole in their balance sheets. But the Scottish whisky industry is a global brand which not only supports the Scottish economy, but it's very, very important to the UK economy as well. It's really important the Treasury, the government, understands how this is going to impact on this global brand. And it's important to remember just some of the numbers associated with the Scottish whisky industry. It contributes £7.1 billion to the UK economy. It supports 41,000 jobs in Scotland, some of them in our most fragile and vulnerable communities, whether that be in the Highlands, in Moray, in the Borders, and all over Scotland. The whisky industry has some sort of footprint and impact, whether it's the distilleries or the farmers who are growing the crops that go to be distilled. The whisky industry is a key part of the Scottish economy, but also is a key part of many local economies, in that they're providing local jobs in these remote communities, they're supporting local events, and very often they are supporting the local services, whether it's the local school or the village shop and all the other key parts of that community. Now, the government claims, the Minister and the Chancellor claimed, that the rise in alcohol duty is going to boost revenue, but history says something very, very different. Indeed, the Treasury's own data says something very, very different, because when duty was hiked by 10.1% in 2023, spirits revenue didn't go up, but actually plummeted. Now, in 2023, before colleagues make interventions, I appreciate that was a Conservative Chancellor that made that change, but Scottish Conservative MPs argued very, very strongly for that not to happen, because we accepted the representations that the Scottish Whisky Industry, the Scottish Whisky Association, and many of our constituents were making against this tax rise. And the evidence has backed up what the industry was saying. You put up taxes, but the revenue that generates actually falls. Now, according to the Scottish Whisky Association, that tax hike actually cost the Treasury £150 million as consumers pull back. They stop spending as much as they did. And by doubling down on this, I believe the government, the Labour government, are going to make the situation, going to compound the situation even more. I believe the Chancellor and his government is trapped in a doom loop where higher taxes lead to lower sales, which lead to lower tax receipts, which lead to, you guessed it, even higher taxes from elsewhere as they scramble around to try and fill the gap. Madam Chairman, you cannot tax a sector into prosperity. Now, the other bit of this which I want to touch on briefly, is the impact this is going to have on our high streets, on pubs. But it's not just the distilleries that are going to be affected and suffering as a consequence of this tax hike. From the Highlands to the borders, our hospitality is screaming out for, and I quote, breathing room, because all they're getting from this government is a tightening of the noose. And I'm afraid the Scottish Government are compounding things in Scotland even more with their policies, their anti-jobs policies, and that taken by this UK Government's policies is making things even worse. Now, we've absolutely.
Grateful to the honourable member. He references his belief that the Scottish Government are engaged in the practice of anti-jobs policies. Could he explain, therefore, why unemployment in Scotland is substantially lower than it is in England?
By any measure, and I'm grateful to the honourable member for making that point, but by any measure the Scottish economy is not doing well. Scotland is, by any definition, the highest tax part of the United Kingdom, and whilst paying all this extra tax, none of my constituents, I'm sure his constituents would agree, do not feel they're getting any extra benefit from those extra taxes. Our NHS is not performing well. Our education system is not performing well. There's potholes on all our roads. Our local authorities are underfunded. Taxes going up in Scotland, but public services are going down. But of course, we have an opportunity in a few weeks in Scotland to replace a failing Scottish Government by electing a pro-UK Scottish Conservative government to replace a failing nationalist government. Now, the hospitality sector, the pub sector in Scotland, are not just having to deal with these higher rates of alcohol duty, they're also dealing with the higher national insurance hikes, the jobs tax, the national living wage hike, as well as all the other red tape which is being imposed on them, finding it more and more difficult to do business, which is why the number of pubs is falling as a consequence, as a direct consequence of decisions that this government has taken. In fact, in 2025, we saw a record number of licensed premises handing back their keys because they could no longer make their balance sheet work. Now, the other point I want to make, Madam Chairman, is just, and a number of other colleagues have mentioned this already, is more than just where you go to have a drink. It's more than just the value of the drink. It's the social value that it provides to the local community as well. I know in my constituency, the pubs are a real focal point for the. I mean, I represent 90, 100 different communities. Not all of them have a pub, but those that do still have a pub, the pub has become the focal point for those communities. It's where people go not just to have a drink, but to meet friends, to chat to neighbours. It might be the only conversation that they are having with people during the course of that day over a social pint or over a social, can of cola or something. But it's the only contact they are having with many other people. And I just want to mention just a couple of some of the excellent pubs that I have in my constituency, whether it's Black Bull in Duns, the Cobbles in Kelso, the Ship in Melrose, the Plough Hotel in Yetton, the Office Bar in Hoyk. And one pub which I must mention, which has bucked this trend, is the Blackadder in Greenlaw, which I said earlier, all these pubs have been closing. This is actually just reopened, and it's going from strength to strength. But they highlight the huge challenges which the government are imposing on, despite the fact they have made this effort to open and to get people back into the bar. They are very clear about the challenges, largely I have to say, by the UK government, that it's being imposed on them, and they are finding it so difficult to do business and to provide that service that they're providing and to run the business that they are. And we're fast approaching a point where people in Scotland and across the UK are no longer going to be able to go down to the local to enjoy a drink, and the only people who can afford Scotland's national drink, a glass of whisky, are going to be those people living outside of Scotland as opposed to those living in Scotland. So I just wish the Chancellor and the Minister and the Government would reflect on all the voices who are highlighting these issues, crying out for help, recognise the service that these important local businesses are providing to their community, and to listen to all the publicans who have decided to ban Labour MPs from their premises because they feel so strongly about this issue that they've decided to make a stand and ban customers from coming in because they don't agree with the policies that they are imposing. And I would encourage the government to think again. And if they can't think again tonight, at least recognise by having a cumulative assessment of all these changes, they come back to this chamber better informed and justify the choices that they are making in this budget. Thank you.
I call Paul Curler, followed by Steve Darling. Paul Curler.
Thank you, Madam Chair. Clause 86, a line about alcohol duty, may look technical, even innocuous. But outside the chamber, places like my constituency in Wimbledon, it lands with a thud. Before I go further, I should declare an interest. I'm the chair of the APPG for the nighttime economy. I'm also the owner of a speakeasy cellar door in Covent Garden, which I've owned for nearly 2 decades. Through the financial crisis, through Brexit, through COVID, yet nothing compares to the crisis hospitality is now facing. One constituent wrote to me as a camera supporter, asking why pubs are being hit yet again through changes to business rates. Another told me that the rateable value of his small unit off Hayden's Road in Wimbledon has risen from just over £15,000 to more than £22,000. Another constituent who runs venues in London and Birmingham thought the budget would bring relief. Instead, he is facing sharp increases in operating costs in the years ahead. Admittedly, the Chancellor has belatedly indicated she's going to offer some form of business rate relief to pubs. But what about the rest of hospitality? The restaurants, the cafes, the bars, the music venues?
Will my honourable friend give way?
I will indeed.
Thank you. I thank my honourable friend for giving way. Gareth, who runs the Cow and Apple in Yeovil, has told me he feels that the assessments and consultations on how the proposals in the finance bill will impact the viability of the rural hospitality sector were not good enough. Does my honourable friend agree with me that this is why we need to pass Liberal Democrats' new Clause 9, which calls for a review of the impact of the hospitality sector of these alcohol measures and broader budget policies within 6 months?
Indeed, I thank the honourable member for his intervention. Indeed, I do. It's death by 1,000 cuts. Those who run hospitality businesses are being hit by cost after cost after cost. The government must listen. Although alcohol duties brought in around £12.5 billion in 24-25, hospitality, by contrast, contributed over £60 billion to the economy in 2023 and supported over 2.5 million jobs, over 7% of the workforce. Yet UK Hospitality estimates that 89,000 jobs, yet nearly 100,000, were lost in the 9 months after the October 24 budget. Official figures show that 366 pubs closed in the year to December 2025. That's one pub every single day. The roots of this crisis lie in years of Conservative mismanagement, Brexit labour shortages, broken business rate system, energy price shocks, commodity price increases and a cost of living crisis. Many in this sector hope that a change of government will bring a change of direction. Yet things have only got worse with the rise in employers' national insurance contributions. The cumulative effect is undeniable. Rising costs for shorter opening hours and fewer staff, and offering us easier opening hours or longer opening hours doesn't help when we haven't got customers coming through the door. Investment is deferred, and too often doors close for good. When that happens, high streets lose more than businesses. There's employment, footfall, and social infrastructure on which communities depend. That is why the Lib Dems are calling for an emergency cut in VAT for hospitality to 50% until April 2027. Real reform of business rates and a proper review of the unworkable wine duty system. Measures like these will protect jobs, support high streets and, in time, strengthen the public finances rather than weaken them. The honourable member for Edinburgh South West, he's gone now, but he asked where the money will come from. Well, we keep telling you, get rid of your red lines, join a customs union, negotiate a customs union with the EU, which would raise £25 billion a year for the Exchequer. Businesses in Wimbledon and across the country are not asking for your pity. They're asking for a tax system that reflects the pressures they actually face. If ministers are serious about protecting jobs, strengthening high streets and growing the economy. They should reverse this tax increase and introduce an emergency VAT reduction on hospitality. Thank you.
Steve Darling.
Thank you, Madam Deputy Speaker. And for this debate, I will be looking at, my speech will be looking at the proposals before us through NE6, where, as Liberal Democrats, we're asking for that cumulative impact assessment to see what the impact of all these proposals are going to make on our hospitality industry. And one needs to bear in mind how our hospitality industry is in fear. They are in fear of the future. They're in crisis mode, and that means that they are not prepared to invest, to look to take a chance and make sure that they're improving their offer, because after a medley of challenges for them, they fear the future. So clearly they hunker down and hope for the best. And one reflects on the international pandemic that was a massive hit, and I know that our tourism and hospitality economy in Torbay has still not recovered to pre-pandemic levels. Again, the outrageous second invasion of Ukraine 3 years ago, almost 4, where there was where we've had a shock to the cost of our energy, and then some self-inflicted wounds, I'm afraid to say, Madam Deputy Speaker, the national insurance hike that we've seen occurring, and then the challenges that we see around employment. And when I speak to those from the hospitality industry, particularly David from Rock Garden in Torquay, he shares with me how his utility bill has gone massively high. It's £3,000 a month. That dwarfs his rental massively. And Ofgem are asleep at the wheel, and they need to be backing local businesses and driving those changes that we need to see. I know that our hospitality industry are in horror at a lot of the proposals that are coming as far as business rates, and the government need to apply the full 20% rate of relief to make sure that there are those protections. And I'm afraid to say, Madam Deputy Speaker, that a lot of those in the hospitality industry scoff at the proposals of deregulating around the edges, because if you haven't got the people in the premises to actually pay the money over, you're setting yourself up to fail. I'd be very happy to give way to my colleague from Devon.
I thank my honourable friend for giving way. He may be aware, being in the neighbouring constituency to me, that last week 3 restaurants in the town, 3 venues in the town of Kingsbridge closed. Wild Artichoke, the Old Warehouse and the Old Bakery, all much loved venues. One of the owners of one of those venues told us that part of the problem was the accumulation of challenges that the hospitality industry is facing, not least the lack of people coming through the door and spending money, as my honourable friend has just said, because of the cost of living crisis, but also business rates and the employers' national insurance contribution rises have just made it impossible to continue. Would my honourable friend agree with me that it's a tragedy that these places are closing, and we're seeing places closing every day, and something has to change before the hospitality industry is devastated?
Thank you. And I'd like to thank my honourable friend for her contribution, and she's spot on. We need the government to wake up and smell the coffee and realise the challenges that our hospitality industry does truly face. And we see some national chains like Spoons who are able to use their buying power to drive down the cost of a pint that many people will reflect on when they cross the threshold of a venue. And the reality is, for lots of independents, because it's independents that are really important, a £6 a pint is the minimum that they can possibly achieve with all the costs that they've got involved in their world. And when you play that against the cost in a supermarket, it's really scary. And the Minister quite rightly highlighted the difference that we see of that. More than 70% of our alcohol is consumed from purchasing at a supermarket. And I personally feel we need to have a national debate around whether we've got the balance right there and making sure that we're driving greater footfall towards our hospitality industry.
Would my friend give way?
I'm happy to give way to my colleague.
I very much appreciate that, and it's to reiterate the point how important that is. In my constituency of Harpenden and Berkhamsted, it's too little too late for many. There's the Lusmans is closed in Berkhamsted, the Elephant and Castle in Wheatamstead, but we need to have support from the government to make sure that more don't close. So would my honourable friend agree with me that actions such as the Lib Dem call to reduce VAT to 15%, at least till April 2027, is the step to start protecting hospitality before it's too late for others?
Thank you. And whilst I don't know those venues, I suspect some of those may well be on the high street. And we, as Liberal Democrats, know that our communities see our high streets as the beating heart of our communities. And by backing our hospitality industry, we're actually backing our high streets. And Anthony from Otto in Torquay, he shared with me how he sees independents are actually powered by families. They put people first. The reality is that an independent isn't going to get a regional chippy in. He's going to take on the chippy to do some work from him, who he plays football with on a Sunday morning. He's going to have some skin in the game of actually knowing that he knows the kids because they might be going to school with his kids in the local sixth form. There is a level of skin in the game that they have as independents. And so that's why we need to be making sure that we're setting up an economy that supports independence, because what I found extremely scary this weekend when I had a conversation with a number of these people, they were saying, why are we doing this? We could actually be a manager of a local supermarket and sleep at night. And so, Madam Deputy Speaker, I hope the Minister will listen to these pleas and make sure that we do this cumulative impact assessment. Thank you, Madam Deputy Speaker.
Robbie Moore.
Thank you, Madam Deputy Speaker. And I rise to speak to Clause 86, a new Clause 26 that has been put down in the name of the official opposition, a clause which, of course, requires the government to carry out a review of the increased level of alcohol duty we'll have on our pubs and hospitality sector, the compounded interest, the cumulative impact that all of these measures will have on our hospitality and pub sector, because this comes on the back of a huge amount of tax revenue that's going to be raised from the last budget. £26 billion worth, Madam Chairman, £64 billion worth if you take into account the last two budgets. And of course, if you look specifically at alcohol duty alone, this brings in an additional £400 million a year, a raid on our pints, a raid on our spirits and those drinking glasses of wine. Alcohol duty is, of course, set to rise by an inflation-busting 3.66% at the start of this February, equating, Madam Chairman, to a 2p increase on the price of a pint in a pub. And, Madam Chairman, when I was out in my constituency speaking to the landlord of the Dog and Gun in the Worth Valley, or at the Craven Heifer in Addingham, or the Airedale Heifer in Keighley, or the Black Cat, as I do in Ilkley, all of these pubs are saying that the cumulative impact, not only a fuel duty increase alone, but of course employers' national insurance rising, the soaring energy costs, minimum wages increasing, the business rate relief reduction not taking place at the reduction that was initially indicated. And of course, the tourism tax, which is going to come down the line as well, a tax which will impact those areas like Haworth in the Worth Valley in my constituency, or Ilkley, where a tax is going to be collected, go into a generalised pot to be redistributed by the Mayor of West Yorkshire. I suspect not back in places like Ilkley or Haworth, but to where are effectively being used as the cash cow for the rest of West Yorkshire. So these are all detrimental impacts over and above the alcohol duty. And of course, at a local local level in Ilkley, we've got parking charges running out now from the end of this month on-street parking, all of which making it much more difficult for places like the Flying Duck and the Black Hat in Ilkley, where people like to go and enjoy a drink. And of course, disposable income is getting less in my constituency. We've got Labour-run Bradford Council increasing council tax by 14.99% in the last 2 years. People are having less money in their pockets, and then you have a Labour government then hitting our pubs and our hospitality sector, and boy, do they feel it. I would like to specifically understand from the Minister why there is still this linkage to increasing alcohol duty linked to RPI, when the government specifically reference and acknowledge that the RPI reference has flaws in itself. And why is the government not referencing this against CPI, which is, of course, the official measure of inflation? And the Minister didn't quite reference that in her contribution to date. And that is exactly why new clause 26 is so important that this government acknowledges that must be voted through this evening, because that allows a proper assessment of all of those impacts of cost overheads on our pub and hospitality sector that I've referenced. Because, Madam Chairman, drinkers in Britain already pay around 54 pence of duty per pint pulled in the pub. And the British Beer and Pub Association says that Britain and England is the third highest level of tax in Europe after Finland and Ireland when it comes to drinking a pint in a pub. And Madam Deputy Speaker, that is just outrageous when we know all of those positive impacts that are had on those communities, those rural communities and people that like to go to the pub to enjoy it. So I say to the government, they should be working with our hospitality sector, working with our pubs across all of our constituencies, not against them, as we have seen. So I'd like to specifically understand from the Minister, in addition to the questions that I've asked around RPI and not using CPI, is what assessment has this government undertaken on the cumulative impact on our pubs to date and our wider hospitality sector to date? And if the Minister, as a Treasury Minister, could enlighten me, given the number of U-turns that have happened in this place, and we've seen, Madam Deputy Speaker, just today, the government, the Prime Minister, rolling back on digital ID. When we've had changes, fiscal changes made outside of a budgetary cycle, outside of the budget being made, like the changes on APR and BPR, how has the recalibration of tax revenue been made coming into the Treasury? How much will it cost? And how is that then going to impact the spending plans of this government? We suspect, although it has not been announced formally, but it's been trailed in the press, the changes around business rates, which would be welcome. Of course, all of us on this side of the House, indeed on the Conservative benches, want to see business rates scrapped in full. And I can't for the life of me understand why the Labour government won't follow the Conservative Party in that call. But if that change then does take place, outside again of a fiscal event, where on earth is the government getting the money from to meet its spending plan? So I say, on behalf of the many pubs, the many hospitality sector that I represent across Keighley, Ilkley, Silsden, the Worth Valley, that have been kind enough to come to me with their concerns, get a grip, because if they do not do so, quickly, I fear for many of those pubs and hospitality sector that are going to go out of business very, very quickly under this Labour government.
Madam Chair, with clause 86, the Treasury in Westminster continues to treat Scotland's vital Scotch whisky sector as a cash cow, with duty rising again in line with inflation in the budget. As the Scotch Whisky Association have warned, the previous 3.65% increase to spirits duty actually reduced revenue by 7%, costing the Treasury £150 million. It seems like an opportune moment to remind the Minister that her ambition and that of her colleagues should be to increase tax receipts, not to erode them. In my constituency of Angus and Perthshire Glens, just some of our distilleries include Dewars, Blair Athol, Edredare and Glencadam, 4 of the many distilleries striving to deliver global excellence, but all while being gouged year after year by the Treasury in London. Hiking duty in the November budget for the third time in 2 years places substantial additional headwinds in a sector already mitigating for job losses, stalled investment and business closures. If the Labour government genuinely values industry in Scotland beyond the grasping hand of the Treasury, then they should work with us to amend or remove Clause 86 in the bill. That would have been a lot easier if the SNP's Amendment 30 had been selected for debate, but nevertheless I can but appeal to the Minister's better and last-minute judgment on this matter. A Scottish coalition of drinks, tourism and farming representatives warned in October that duty increases had already contributed to around 1,000 job losses and claimed duty can make up around 70% of the cost of a bottle of Scotch. That same coalition emphasised that Spirit's outsized role in hospitality margins, where they represent a smaller share of sales but a larger slice of profits, meaning duty uprating can squeeze already extremely fragile margins within venues, especially in Scotland's towns and rural areas with thinner footfall. And this tax rise could be the final nail in the coffin for many hospitality businesses already on the margins of solvency. I can't emphasise that enough to the Minister, especially those in rural settings, such as in my and many other honourable members' constituencies. I don't hold with banning Labour MPs from pubs, because pubs are about being in the company of all walks of life. And if people wish to select a company that they keep, well, they can do that in their own house. In a public house, we convene with the whole community and visitors alike. That's the magic of it. I give way.
I'm very grateful to Honourable for giving way. He's making a strong case for the whisky industry. Would he also recognise that the cider industry in my part of the world, in Somerset, is deserving of good treatment because of its support for agriculture? It used to benefit from a duty of 40%, that of the wider beer and drinks industry. That has crept up, so the average is now about 75%. And in some classes of cider, it's actually more than the duty on beer. So does he accept that to support agriculture, that differential should be restored?
Well, I've heard a range of cases from honourable and right honourable members about that differential, and I certainly would like to see nothing happen that would jeopardise either the drinks, the hospitality or the agricultural sector in the West Country, but I'll leave that to be divined by others with a more material interest if he doesn't mind. Our pubs are revered institutions and they're under threat as never before across these islands. So let me put it in really simple terms. Before the election, hospitality was already struggling, with the post-COVID recovery and the highest taxes since the war, let's not forget, with a punitive and unrelenting business rates regime, with disastrous misadventure of Brexit and labour shortages, with 16 years of the UK without any meaningful economic growth, and on top of all of that, number 5, the highest energy costs in the developed world. And since the election, Labour have added to that. And I did express my concern at the outset, the Minister was kind enough to let me in, about the effect of compound effect. And many other members have mentioned that since the start of this debate, and she should really take cognizance of it, because since the election, Labour have added to the hospitality sector's pain with a massive rise in employers' national insurance contributions, even higher energy bills, even greater economic despondency pervading across society, an entrenched cost of living crisis keeping people at home, an increase to the minimum wage with no increase in revenue to support the payment of that wage, no respite nor consideration for the VAT millstone around hospitality's neck. And the Labour really should listen, because on top of all of that, there is now a 25% increase in unemployment since they came to power, with 352,000 people now unemployed that weren't before Labour came to power. I will give way.
As the honourable member will know, the Scottish Government today were announcing their budget. I'm sure he's aware of the comments from UK Hospitality Scotland's executive director, who said the Scottish Government budget, which took place today, and I quote, "It has not sufficiently addressed the challenges that hospitality businesses in Scotland face, and the majority will still be paying higher business rates in April." How does he reflect on those comments in light of what he was just saying?
Good point. This. I reflect on the fact that following the Cabinet Secretary's for Finance's budget today in Scotland, 93% of hospitality, retail and leisure businesses will be paying no or reduced rates in Scotland, and that's because the SNP are responsive and closer to people in Scotland. And further to that, not wishing to shoot the honourable member for Berwickshire, Roxburgh and Selkirk's Fox again, he says about the taxation rates for people in work in Scotland. Well, I'm sure his constituents will be grateful to know that 55% of taxpayers in Scotland are paying less tax than they would if they were part of the fiscal regime within the rest of the United Kingdom. Madam Chair, the problem with that figure for unemployment, which is a scandal, 352,000 people unemployed that weren't before Labour came to power, is unemployed people can't afford to go to the pub or go out for a meal. And it's against this backdrop that the Minister seeks to defend this latest hike in alcohol duty. It's totally unforgivable. I don't think the Minister believes a word I'm saying. Of course, she certainly won't reference anything I say in her winding up, which I actually take as a kind of contrarian compliment. And I don't know clearly if she has a local that she goes to. But if she does, she can take my list of 12 life-threatening headwinds for pubs, all caused by the UK government, mostly Labour, and see if the landlord or landlady in her pub disagrees with my analysis before she introduces the 13th headwind, unlucky for pubs, with clause 86 of this bill. I'll be back in, and so will the SNP, new clause 9 today, Madam Chair, because we really do need to review, as many members have said, the way that alcohol is purchased and consumed in the United Kingdom and the fiscal burden that follows that, because off-sales are getting far too easy a run of this, and on-sales are going to disappear before our eyes. So I support new clause 9 and new clause 26. It's too late today, Madam Chair. We haven't been able to stop Labour coming to assault our pubs. But I look forward to standing up for Scotland's hospitality sector again at this report stage, where I hope the Minister will have had a change of heart, or at the very least be in possession of a revised cost-benefit analysis that stacks up for hospitality.
Luke Evans.
Yeah, and I've come here to talk about duty, but not duty in the conventional sense, because I feel I owe a duty to the cafes, the restaurants and the pubs in my constituency to tell the government just how poor the impact is and to hold them accountable, which is why I will be supporting new clause 9 and new clause 26. So if I start with new clause 9, the review of the cumulative impact, I agree with the Liberal Democrat spokesperson that it is a cumulative impact. Actually, I would go further, and I have done, calling it a toxic concoction. Because it is true, the Conservative government did raise taxes, and I could imagine in the future that another Conservative government may need to do so as well. But it's the toxic concoction that this government has set out upon about the Employment's Right Bill, the raising of the minimum wage, the reduction in support on hospitality exemption, all at the same time is compounding the problem. So why I'm here to use my voice and raise my duty is to ask the government to be accountable and be able to show its workings. And these two amendments are an attempt to do that, especially when we know we've seen the government come forward in its first budget saying that it didn't need to raise any further taxes. Yet the subsequent budget we had in 2025 that we are debating now brought taxes further forward by £26 billion. When by her own admission the Chancellor said the slate was wiped clean. And it seems to be the Chancellor has hospitality in her sights, and it's not clear why. What does she have against cafes? What does she have against hotels? What does she have against restaurants? Now, she seems to be softening because she's heard from her backbenchers the impact it's having on pubs.
Would my honourable friend give way?
I will give way.
I'm grateful to my honourable friend and to come to the rescue of the Chancellor. It turns out she simply didn't understand the impact, according to the Business Secretary. Perhaps the Minister in her winding up will be able to confirm that she literally didn't know what the impact of her own policies would be on these hospitality businesses, and she'll be able to tell us whether the Business Secretary was right to identify this failing of understanding by the Chancellor.
And is very charitable because the Chancellor has said she doesn't know. However, we've also known the documentation released in the budget says that the Treasury did. So what's gone wrong there? Because as we've heard today in the committee, we heard that 5,100 pubs are going to have a rateable value that's going to double. But actually the Lib Dem spokesman missed the other point, which is 1 in 8 pubs will see an over 100% increase in their rateable value. So the government does have a question to ask. Did they willfully ignore that and choose to impact hospitality, or were they mistaken and actually not competent in seeing that there's a problem? I will.
Thank you for giving way. Does it not think that New Clause 9 would actually be helpful to government backbenchers, given how frequently number 10 is U-turning, then including yet another U-turn on digital ID just today, then actually having an assessment on the cumulative impacts will actually help them when they come to their potential next U-turn in this area.
Speak up, Jacob. Speak up, Jacob.
In government, and he understands why it is important to have that fixed point that we all in this House can reference, but most importantly, his constituents who own a pub, who own a cafe, who own a hotel, that are going to be impacted. So that's why I want to see this measure put in place, because I think it will go a long way to try to understand the impact that they are facing. Because if it is rumoured that the government will do something for pubs, I simply pose the question, why pubs, not cafes? Why pubs, not restaurants? Why pubs, not hotels? And so when I turn to the next amendment that we have here, New Clause 26, if my memory serves me right, what was the biggest cheer in the 2024 budget from the other side? The 1p reduction in the pint. But what have we seen this time round? We've seen a 2p increase in the budget. Now, that didn't get cheered. Now, either, again, maybe the members didn't see it, or maybe it was hidden inside the detail, which is where we are today. And this seems to be the problem when it comes to whether we're debating thresholds last night or dealing with pubs today and rateable values on duty. Either the government doesn't know what it's doing, or it's willfully pulling the blinds over the eyes of the constituents. But fortunately, this side are here to point out the wrong that is happening, to hold them to account, to do our duty as opposition, and call them to be accountable by placing amendments like New Clause 26. So that's why I will be supporting New Clause 9. That's why I'll be supporting New Clause 26. And until we see some support for pubs, this is the only way we in this House can hold the government accountable and bring transparency to what is actually going on in the Treasury, in Number 10 and in the country.
Thank you, Madam Chair. I would like to place Clause 86 in the wider context of the budget's impact on the hospitality sector and in particular on the village pub. I was very grateful to the Small Business Minister for agreeing to meet in December with 2 landladies from my constituency. The Minister heard from Becky, who runs the Red Lion and the White Hart in Ensham, and from Donna, who runs the Oxfordshire Yeoman in Freeland. These village pubs are at the heart of their communities, as other members have highlighted. But Becky and Donna described how hard it is to make the books balance. Donna gave the example of the work that she does in her community. She has a number of regulars. When one of them doesn't come in on a given day, she will give him a call, check he's all right, suggest he comes in. Not because he's a big drinker, but because it's the place where he finds somewhere warm and sociable to be, and she knows that he has mental health challenges. In other ways, these 2 publicans are contributing to the lives of their community. Becky put in front of the Minister some of the costs that she has faced and the increases she has faced. A fillet of fish cost her £2.30 in June 2023. When she saw the Minister in December 2025, the latest cost was £4.90. As well as the more than doubling of these food prices, energy prices have rocketed. But the greatest anxiety for these 2 publicans came from tax and regulation. Labour costs have increased with employer NICs. Becky gave the example of her employer NICs contributions, which in gross have increased over 3 years more than 4 times. Both have had to release staff. Donna is now working more than 80 hours a week, serving both as the chef and the general manager of her pub. She places orders on a Monday and Tuesday when covers are lower, and she's in the kitchen Wednesday through Sunday. Meanwhile, business rates represent a bombshell. Becky faces a near 120% increase in business rates at the Red Lion, but she is outdone in my constituency by the 223% increase at the Lion in Wendlebury. Becky finally highlighted the impact of VAT on the hot food sold in her pub. Before the budget, Liberal Democrats called for a 5% cut in VAT to offer some relief to the hospitality sector. Take that fillet of fish. That's gone up over 100% over 2.5 years. Over the same period, the Treasury's VAT take on that food has gone up by the same amount, 100% over 2.5 years, an incredible increase in revenue with no relief to the publicans. The Minister asserted earlier that the government was backing British pubs, despite the many hits to their bottom line. She also said that the structure of duty increases and reliefs is intended to support pubs by raising the relative price of alcohol consumed at home compared to that consumed in a pub. Other members on all sides have made proposals to go further. But many pubs have sought to diversify and increase the share of income and profit from food. Those that have tried are now being hobbled by the VAT impact, which is another multiplier of costs. Becky and Donna are but two examples of the many publicans across my constituency who are holding on by their fingertips.
Would you give way on that point?
I shall.
Does you share my concern that often the publicans, the only way they can get round this is to either reduce their hours, reduce their staffing, or take on more themselves when they're already working 24/7 to try and deal with the costs? But with this kind of change, the impact is going to be inconsolable for them.
And I wholeheartedly agree. Both of the publicans I'm talking about are working in excess of 70 hours a week. They have laid off staff. That's fewer jobs for those who might be able to engage in entry-level occupations. And it is hitting employment as well as other aspects of the economy. So too many local pubs in my constituency, as in so many others, have shut, and other publicans are considering leaving the sector. And when they go, communities lose a key institution that brings people together at the heart of their villages. Madam Chair, that is why I strongly support Liberal Democrat New Clause 9, which would ensure an assessment of the cumulative effects of this government's careless assault on the hospitality sector.
Thank you, Madam Chair, and I'm grateful to all honourable members for their contributions to today's debate, almost all of whom have spoken very passionately indeed about their local pubs. And I will specifically acknowledge the contributions of the honourable member for Angus and Pastor Guns, just to deny him the pleasure of me not doing so. So, Madam Chair, we're taking a prudent and responsible decision to uprate alcohol duty in line with RPI. This is fully assumed in the OBR's baseline forecast, and so failing to uprate would come at real cost. And based on HMRC's, I'm going to make some progress, based on HMRC's Ready Reckoner, freezing alcohol duty would cost the Exchequer around £400 million a year, money that would, despite the party opposite's best efforts to pretend otherwise, have to be found elsewhere. This is one of the measures, Madam Chair, that assists in ensuring that our economy is strengthened and our future prosperity more secure. And indeed, it does that without taking the axe to public services and to investment policies from the party opposite, which had catastrophic consequences for all of our constituents. I'm going to make a bit more progress. Madam Chair, Amendments 8, 9 and New Clause 26 would require the Government to publish reports on the impacts of alcohol duty. The Shadow Exchequer Secretary invited me to refer to our tax information and impact note, and indeed I will take him up on that invitation. And as is usual practice, our note was published at the budget outlining the anticipated impacts of this measure to alcohol producers and to the hospitality sector. Because this uprating maintains the current real terms value of the duty, the Government doesn't expect it to have significant macroeconomic impacts, including to the employment rate, nor to hospitality businesses' costs, where duty on drinks will have comparable relative bearing as now. Regarding impacts to public finances, I'm going to make some progress. HMRC published data on alcohol duty receipts quarterly. This data is reviewed alongside other evidence by the OBR when it produces its forecasts of alcohol duty receipts, as indeed it did most recently alongside the November budget. So the Government's view, as is evident from OBR certified policy costings in recent years, remains that freezing or cutting alcohol duty rates reduces duty receipts. Now, the honourable member raised the importance of producers of Scottish whisky. And I would agree with him as to that importance. This government is supporting key Scottish industries, including whisky, including with our free trade agreement with India, which will boost exports of whisky and will add £190 million worth a year to the Scottish economy. Now, I'm going to make indeed more and more progress. So, the honourable member for Keighley and Ilkley, a wonderful place of the world where in fact I was between Christmas and New Year, referred to the difference between CPI and RPI. Alcohol duty, as he knows, we're up rating by RPI, like many other taxes which are expressed in cash terms. RPI is obviously, as he will know, widely used, and moving away from RPI is fraught with difficulty. Now, I want to address, Madam Chair, the important point on business rates and on national insurance contributions. We've discussed some of this already in this debate, and as honourable members know, the Finance Bill does not contain measures on either business rates nor employer NI contributions, and I will not accept an amendment relating to them. However, I will reiterate, as I have said already, that pubs are at the heart of our communities, and we want them to thrive. As I said, we've heard some really heartfelt contributions and mentions of particular pubs in this debate today, and the role that they have played in each of our lives. I could tell my own stories in that regard, but none of us would get home in time. What I will say, Madam Chair, is that the budget, as honourable members know, the Chancellor introduced a £4.3 billion support package to give relief to those seeing increases to their business rates bills. We have made clear, as indeed I've said earlier, Madam Chair, that we're continuing to work with and talk to the sector on that support and what further support and action we can take. Now, I will come to this point. The Shadow Liberal Democrat spokesperson raised several questions. We will come forward with that support package when we are able to do so, any further support that we're going to make available. She also raised a point around VAT. Now, I know that there has been an answer to the PQ for one of her colleagues on this, in exactly this point. But I would gently say to her, as indeed I'd say to other honourable members in this debate, that if you want to cut taxes, the money has to come from somewhere. And this is not a point that has been acknowledged at all. So, Madam Chair, I therefore move that Amendments 8, 9 and new Clause 26 be rejected, and that Clause 86 stands as part of this bill.
Very good,
The question is that Clause 86 stand part of the bill. As many as have that opinion say aye. Aye. Of the contrary, no. No. Division, clear the lobby. The question is as on the order paper. As many as are of that opinion say aye. Aye. Of the contrary, no. No. Tellers for the ayes, Stephen Morgan, Taiwo Owatemi. Tellers for the noes, Alicia Cairns, Lincoln Joh. Order.
The ayes to the right, 344. The noes to the left, 173.
The ayes to the right were 344. The noes to the left were 173. So the ayes have it. The ayes have it. Unlock. New Clause 9 has been selected for a separate decision. I call Daisy Cooper to move New Clause 9 formally.
Formally. Review of cumulative impact on the hospitality sector.
The question is that New Clause 9 be read a second time. As many as are of that opinion say aye. Aye. Of the contrary, no. No! Division, clear the lobby. Are you ready? The question is as on the order paper. As many as are of that opinion say aye. Aye. Of the contrary, no. No. Tellers for the ayes, Claire Young, Zoe Franklin. Tellers for the noes, Stephen Morgan, Taiwo Watame. order.
The ayes to the right, 181. The noes to the left, 335.
The ayes to the right were 181, the noes to the left were 335. So the noes have it, the noes have it. Unlock. New clause 26 has been selected for a separate decision. I call James Wilde to move new clause 26 formally.
Formally. Yeah. Statements on increasing alcohol duty.
The question is that new clause 26 be read a second time. As many as are of that opinion say aye. Aye. Of the contrary, no. No. Division, clear the lobby. The question is as on the order paper. As many as are of that opinion say aye. Aye. Of the contrary, no. No. Tellers for the ayes, Alicia Cairns, Lincoln Jott. Tellers for the noes, Stephen Morgan, Taiwo Watami.
Order, order.
The ayes to the right, 172. The noes to the left,
334.
The ayes to the right were 172, the noes to the left 334. So the noes have it, the noes have it. Unlock. The question is that I do report the bill, clauses 1 to 8 and schedules 1 and 2, clauses 9, 10 and 69, clause 62 and schedule 12, clauses 63 to 68, clauses 83 to 85 and schedule 13 and clause 86 to the House. As many as of that opinion say aye. Aye. Of the contrary, no. I think the ayes have it. The ayes have it. Order. Whip to report.
I beg to report that the committee has gone through the bill so far as committed to it and directed me to report that with the same amendment.
Clauses and schedules reported to lie upon the table.